I started trading in October 2020 with 1,300 around US dollar, which is around 10,000 Hong Kong dollars. And then I tripled my account in the first 4 months. In 2024, I joined the USIC, just trying to challenge myself and maybe hold myself more accountable. And then it ended pretty well with over 280% return. So in 2025, I have a 209 winning trades and 731 losing trades. So compared to 2024, I traded much more in 2025. Right after the market opens, 20% below the 1 hour EMA. This is very abnormal and it is really stretched and oversold. And I really think the timing has come. And then I think this is the time to take a shot and buy at the reversal, probably 1 minute opening range highs or the intraday breakout. Sell all into the strength because I think this is a really quick move and the volatility is really huge during those times, the period back in April. So I really want to lock the profits in. This is a really quick, like a 13-hour in just half an hour. So it's a really good one. I actually don't have a very strict sell rule. I would sell partial into strength when it's up 3-hour or 5-hour. Sometimes would not take partials if I think the market is really strong and I have huge cushions on other positions. Yeah, I sometimes would just hold positions, trail the whole position along the ups. Generally, I would sell into strength when I think it's really extended on the lower time frame. The entry is really good, the really optimal one. If you're buying it right at the right time, most of the big winners really comes from buying at the right time, not the very random ones. Especially the stocks that is gapping higher pre-market or at the open, it tends to just get slammed and reverses and takes out the low of day, but it eventually would find support and then goes back to the original direction. Or you may see something like it gets a good breakout, opening range breakouts in the first maybe 15 minutes, and then it just reverses and it stops you out at the low of day. And in the later part of the day, it sets up again, finds support and breaks out, takes out the original opening range highs and goes back up. At the beginning of your journey, I think it's good to just copy other traders teach you or share. And then as you progress, as you trade more and have more experience and know more about on your own, then you should adjust it a little bit to make it more suitable for you and develop your own style.
Hey everyone, welcome back to another episode. As always, we bring top traders, US investing champions, and market wizards here onto the show to share their journeys, their strategies, the mistakes they made throughout their careers, and key learnings that they want to pass on to you guys to save you time, save you money, and improve your performance. We've been lucky enough to hear back from many viewers over the past few years about how much of a positive impact this podcast has had on their trading journeys, and we're incredibly grateful for all the support. If you're looking for a free, quick, and easy way to give back to us and show us some goodwill, please double check that you're subscribed down below. And if you aren't, go ahead and click that button. This helps us out in two ways. First, it lets YouTube know that this is a valuable resource and it'll push it to a wider audience of traders. And two, it allows us to reach out to bigger and better guests in the future. So thank you so much for your support in advance. Also, go ahead and click the like button if you haven't already. And if you have any suggestions for traders you'd like us to bring on the show, also let us know down below in the comment section. And with that said, thanks again for your support, and sit back, relax, and enjoy. All right, welcome back everybody to the TraderLion podcast. I'm your host, Christian Qullamaggie. This episode is powered by Public.com. More on them later and down below in the description. Joining me today is someone who I'm really excited to talk with. We did one of these interviews last year, and it was one of my absolute favorites. And I think today's will be no different. Martin Luke is a top performer in the U.S. Investing Championship with a return of over 900%, 969% to be exact. Amazing performance last year as well. He was a top performer with a return of over 280%, but he clearly stepped it up this year. And we're going to dive even deeper into his process, how he focuses on specific stocks, how he manages risks, how he sizes, how he sells, and all those nuances that really make the difference. So first things first, Martin, thank you so much for taking the time again to speak with us here today. I know you went through a lot of work, prepared a lot of material on your process, focusing on pullback buys, and you're going to go through a ton of trades from this past year. So thank you so much for your time and being here.
Yeah, thank you, Richard, for inviting me again. And I don't really expect I would come again and share with all of you in this short period of time. So I hope you enjoyed my interview. So let's
let's dive in. Yeah.
Jump right into it. So let's talk a little bit on my background. And actually, I also shared this in the interview with Richard last year too. So you guys can go to see my first interview with Richard. And I'll also talk a little bit more about on my background in the earlier journeys. So in short, I studied economics and finance in my university. But actually, I think for the economics and finance, actually, the knowledge doesn't help a lot with my trading. I actually kind of worsen my trading, because in school you're getting taught with the models, the theories that are more fundamental side, and also this is a little bit is not very feasible on the reality in the actual market. So if you're learning too much about the theories or the models on the economics and finance, sometimes the stock market would surprise you quite often. So I actually believe that if you're not studying anything related to economics or finance, you actually maybe have an edge compared to those people studying them. So if you're traded without any financial background, it's completely fine. And yes, and I started trading in October 2020 with 1,300 around US dollar, which is around 10,000 Hong Kong dollars. And then I tripled my account in the first 4 months. So in late 2020, it's still in the free money market. Like lots of the spec names are going up, the speculative names. And I really don't know what I'm doing. Just buying the standard stocks or the hot stocks that people are talking about on the internet or in the forums, and then they just went straight up. And it's a really good, like a typical start or a typical beginning journey of a trader if he's entering in the bull market. And so things starting to get worse in 2021. And then I keep trying to buy the small caps, and I keep trying to buy the doing the random trades, and I got a death by 1,000 cuts. I really got, I think, just a consecutive 5 or 6 red months in 2021, and eventually nearly a 50% drawdown. So it's really frustrating, and also like it sets me back a lot, especially when my beginning was that good. When you triple the account in 4 months, and you're still a very young teenager, just enter the university, and then you make some money with trading, but you just got a 50% drawdown right after it, and like it's like a roller coaster in psychologically. So it's really tough. But although I don't feel really good, but I continue to learn new things or to absorb the new knowledge in trading, even though when I'm in my drawdown. So I came across Christian Qullamaggie in late 2021, and he really shaped a lot of in my training, trading. So I think it's really really like a mentor to me. And then in 2022, it's in a bear market. I didn't trade much, and also thanks to I actually at first in the very beginning I learned the VCP at first, and I came across Mark Minervini, and I read his book. I think it's literally like the Market Reset, the first book. And I really love that book, and it talks a lot about the risk management and how to set the stops. So I really guess lucky that I came across Mark in the very early journey, and I developed the system or the habits of setting stops. So even though I get a 50% drawdown, I just keep being stopped out. So, but yeah, that still shaped my current style of trading too. And in 2023, I did a Kavana trade, and then I finally make my P&L curve to an all-time high. So I make a higher high in my P&L curve, and I think that's maybe one of the turning point in my trading career. And it's not only about the P&L. It's about the feedback that market gives you when I suffered a 50% drawdown, and then I didn't give up and keep learning. And 2022 was a bit hard because I didn't do much shorting in 2022. So I'm up a single digit in 2022. So it's like flat in 2022. So I keep trading until the June in 2023. So after this Kavana trade, then I finally make back the 50% drawdown since the early 2021. So it's 2.5 years almost. And this is really a really good gift by the market that rewarding me, that I keep trading and keep learning since throughout the 2.5 years. And I think, maybe I am doing the right way and going the right direction. So I think this is one of the major turning points in my trading career. And in 2024, I joined the USIC, just trying to challenge myself and maybe hold myself more accountable. And then it ended pretty well with over 280% return. So that's the kind of my background in the stories. And so, yeah.
Yeah, and I know this, you talked about it in the last podcast, but, this move to all-time highs, I'm sure that felt, incredible, weight off your shoulders. Your progress is finally being rewarded. And obviously you've kept learning and kept focusing on that constant improvement over the past few years. And we'll talk about, I think, some of the key changes you've made over those years that have led to this, triple-digit performance, both last year and obviously record-breaking performance this year. There's a lot of questions about changes you made, this year compared to last year, but I think we'll get into those as we get into the trade. So I know you've got a few more slides to go through here.
Yeah, sure.
Yeah.
Okay. So let me introduce my trading style a bit. So I also include that in the last year presentation, but I did a little bit of the change and update the stats a little bit here. So I'm a swing trader and mostly a trend follower. And I traded breakouts a lot, especially in the earlier years, before 2023. I traded a lot breakouts and also the EPs too. And I learned them from Christian Qullamaggie, and also the Parabolic too, the Parabolic short or the Parabolic long. And this year, actually starting from last year too, I figured out that the breakouts starting to work less effectively or has a lower win rate. So I got stopped out from the breakouts more often, and stocks tend to shakes me out and they go to the original direction. So I think, maybe I should try to learn pullbacks too, because I see a lot of more and more stocks trying to pull backs into the support areas and find support, and then just bounce back right from the support. And so I decided to learn some pullbacks. And actually I learned the pullbacks is mostly from the short side first. So I wanted to study the how to short in late 2024, and then 2024. Yeah, I think it's in late 2020. 2024 or 2023. Yeah. And then late 2024. And I find out that like for shorts, the best risk reward play should be shorting at the resistance, so right at the bounce or the pullback into the declining EMAs or into the resistance levels. So this is how I like really dig deep in the pullback side, and also I just flip the short side around, and then it will be the long side, and they are really similar. So I will talk about a pullback a little bit more later in the later part of the slide. And yes, I still trade the breakouts or the EPs and the parabolic shorts or the longs, but it's just not that often. And as the pullback more generally would give me a earlier entry than the breakouts. So I will enter at the maybe the consolidation or the smaller when the stock is building a range. So that's why I think I'm trading more pullbacks this year. And so my portfolio risk per trade is around 0.5%. And this is a average risk. And sometimes I will risk less, especially when my trades aren't go well. And sometimes I would risk more when I was really have conviction on a particular trade, or I have a lot of profit cushion, so I can risk more for the trade. And last year I don't limit my portfolio sizing to 35%, but I still limit most of my most positions are around 25 to 30%. So I want my position is at least around maybe 25%, but for some small or micro caps, I would reduce to around maybe 20%, or even less than that, because small caps or micro caps tend to have a higher gap down risk. Maybe some short reports or some the gap down, the bad news that really have a huge gap down, maybe 10 or 20% or even further, 30%. So I will reduce the sizing for the small caps a bit, but generally my average sizing is around 25 to 30%. But sometimes when I'm trading some really slow names, maybe commodities, if I'm trading like gold or silver, or maybe I'm trading the index, maybe the SQQQ, or maybe not the leverage ETFs, but yeah, maybe I'm really trading some very, very slow names or the slow ADR stocks, then I'm going to maybe size larger than 35%, but still I'm going to limit the risk per trade to 0.5%. So I limit my stops at the less than 50% of the stock's average daily range, the ADR. So maximum will be 5%. But I really don't really have that I don't really set my stops that wide now. I think I rarely would set my stop wider than 3% or even 2.5%. I really want to limit my stop below 3 and 2.5%. So I want to focus on the fast moving stocks in the hot setter. So when there are maybe 3 or 4 names that is moving together or setting up nicely, and then I just wanted to take 1 or 2 of them, then I am going to buy the faster moving ones. And especially when if I just limit the drawdown, I just tighten the risk, tighten the stops, then a faster moving stock has a higher return potential, so it helps me to improve the risk reward ratio. So that's the first part of my trading style introduction. Do you have any questions?
Yeah, you covered a ton there, and I think a lot of this will come clear if it's not already clear to you guys when you go through your actual trades and how you do this in practice. But we talked about sizing, or you talked about sizing there. You talked about typically where your stop is and how far away it is. And is it typically at the low of the entry day? Is that typically how you do it? Or is it a little bit different than that depending on the pullback buy.
Yeah, normally it will also be the low of the day,
And you're just,
or sometimes it will be the low of the candle, like my entry candle. I will talk about it. I will include them in the later part.
Yeah, so talk us through your 2025 stats versus 2024, because there's definitely some observations and differences between them that I want to highlight, but I want to hear you go through it first.
Yeah, so in 2025, I have a 209 winning trades and 731 losing trades. So compared to 2024, I traded much more in 2025. I think that partly contributes because I am not like in 2024 I'm still a undergraduate, so I still spend a lot of time in maybe finding a full-time job, so doing the interviews with and also like dealing with my the exams or the assignments. So maybe I think this really that contributes maybe a major part of that in 2024. But also another factor that really increased my number of trades would be traded pullbacks this year.
Hey everyone, just want to hop in real quick for a word from our sponsor, Public.com. Support for the show comes from Public.com, the investing platform for those who take it seriously. On Public, you can build a multi-asset portfolio of stocks, bonds, options, crypto, and now generated assets, which allow you to turn any idea into an investable index with AI. It all starts with your prompt, from renewable energy companies with high free cash flow to semiconductor suppliers growing revenue over 20% year over year. You can literally type any prompt and put the AI to work. It screens thousands of stocks, builds a one-of-a-kind index, and then lets you backtest it against the S&P 500. Then you can invest in a few clicks. Generated assets are like ETFs with infinite possibilities, completely customizable and based on your thesis, not someone else's. To learn more, go to public.com/TraderLion and earn an uncapped 1% bonus when you transfer over your portfolio. That's public.com/TraderLion. This was paid for by Public Investing. For full disclosure, check out the description below, and we've got a link right down there for your convenience if you want to learn more about public.com. Thanks for your support, and we'll be right back.
Pullbacks gives me a lot of the potential high risk entries that I could take. So I'm not just trading breakouts or the EPs, and I can also trade pullbacks. And pullbacks are like happening the good pullbacks are happening really often last year. Like the market, the Qs are going like straight up and riding the 9 or the 21 EMA over months. So any pullbacks to the rising EMAs, then I would try to look for some pullback buy opportunities. So I think learning pullback would also and trading them, and also will contribute a lot to the increasing number of trades. Then the average win and average loss, I think they're similar, but the average loss is much smaller. I think, in percentage terms, I think. So I really limit the loss because in 2024, one of the areas of improvement that I also shared is I wanted to fully respect my stop, and not because last year there are a few occasions that I ignore my stops and leads to a higher drawdown. And also in 2024 there are a few huge gap downs. So it also there are some outliers in the losing trades. But in 2025 there are fewer, maybe only one or two, I believe. And so it also decreases the losing trades and the average loss of my losing trades. Also, as well, I think I also trying to really further tighten my stop as well this year, and so I'm not chasing a entry if the stock is really maybe far away from the low of day or the ideal entry points. So if it's up for more than 3% from the low of day, then I'm just avoiding it. So that also maybe contributes to this decrease in the average loss.
Yeah.
So my win rate is further decreased to 22%, but I don't really look at my win rate that
closely.
Seriously. Yeah, that closely. Mm-hmm. So it's still around like 20 to 25%. And the average window holding period is shorter this year. So I think it's probably because I do more shorting this year, so I'm taking profits a bit more aggressively in closing them into strength. So generally, I hold my shorts for only maybe 2 to 3 days. So that's I think partly like contributes to this decrease in the holding period. For the losers, I reduced them, but I think I didn't do much like improve or like change too much on my losers on how to hold my losers. So I think this is a natural decrease. Yeah. And then I use like 3 indicators, the EMAs, the 9, 21, and 50, and I will also include the 150 too. So I use the EMAs and the dollar volumes. So it's not the volume, just like a simple like how many shares that you trade is on the dollar amounts that the stock is trading. And I'm also using anchor VWAP and more often this year too. And I will talk more about on anchor VWAP in later part too.
Yeah, just a few questions, Martin. First, going back to the very top, obviously you talked more about focusing on pullbacks more this year. How much of your trades would you kind of think broke down between these different 4 types of setups? And how much was that dependent on the opportunity set that was available this year? Like you said, there were a lot of pullback buys versus, do you think you would focus more on EPs next year if, those become, everywhere and are working and following through? Or do you think you're going to keep focusing on pullbacks a little bit more going forward?
Yeah, going forward, I really think it depends. It solely depends on the market conditions. So this year market is, I think, is rewarding more pullbacks compared to breakouts or EPs. So there are less, maybe less breakouts or EPs opportunities, but like pullbacks, it gives me an entry. So if I've already entered the stocks in the lower part of the base or at the consolidation range before the breakout. So I don't need to trade the breakouts. So but if the market rewards the breakouts or the EPs are everywhere in the market, then I definitely would like shift more focus on trading the EPs and for all the breakouts. And parabolics, longs or shorts are not very commonly seen. So there aren't much opportunities for the parabolics this year. I think I only traded the gold mining stocks for the parabolic shorts. I think in October, October or the November. So I don't trade much parabolic. I also traded the parabolic longs in the earlier in April when the market is really panicking and I think after the Liberation Day have a 3 days consecutive big gap downs. So I also traded parabolic longs in that really extreme sell-off series. Yeah.
And that.
So
go ahead, please. Finish your thought if you had more.
No. It really depends on the market condition that it gives me the feedback.
Yeah, it makes sense. And then this year, if you had to look at your performance, how much would you break it down long, short? I think that would be an interesting question. And I do want to touch on more shorting this year. And I know you have some examples, but yeah, I don't know if you have the exact numbers, but if you had to kind of estimate how much of your performance was due to longs, how much was due to shorts, I think that would be valuable information for everybody.
Yeah, if I am not trading shorts in December, because I traded quite a lot of shorts in December, but most of them are losing trades because the market is just chopping around. It didn't have much follow through to the downside. So I think excluding the December short trades, then I think on March and February, in April, only those I think maybe 70% of my profits came from long and 30% came from shorts.
Gotcha.
But also, if I included the loss that I took in December, then I think it only maybe 10 or 15% for shorts, and then 80 to 85% for the long side.
Gotcha. And going back to your indicators, because I think people might ask this in the comments. Do you use those EMAs on all time frames, or is that primarily a daily chart?
On all time frames.
Cool.
Okay, so then I'm going to the next slide then.
Sure.
Yeah, and then my trading style would be using tight stop and with a low win rate. So as you can see, my win rate is pretty low. It's below 25%. And I set my stop really tight, so really mostly under 2.5%. And the right side is the chart describing the parabolic relationship between the stop and the risk multiple. So if you're let me see, are there any highlighters? Okay, so if you look at the blue line, this is for the 25% return trades. So if you are tightening your stop from like 3% to 1.5%, for a 25% return trade, then you can gain a 8.34 risk multiple. So in other words, that it actually can compensate you for for 8 losing trades. So if you are getting stopped out from by like 8 times just by tightening your stop, you can still gain an advantage by just tightening your stop from 3% to 1.5%. And then when the return of the trades gets higher, maybe to 75%, then you can gain an even 25 R advantage. So you can gain a 25 multiple of your risk, which is a huge amount of the profits, and it actually improves a lot on your performance too. So this is like the mathematical side for the advantage of setting a tight stop, and I really enjoy like setting a really tight stop and then seeing the stocks to go like really
right away, or
go right away from my stops. Mm-hmm. And then I really want to like timing the entries really right. So it's like maybe a like sniper approach. So if I'm not correct, then I take a loss. That means I'm not entering in the right time. So that's I think pretty much disrupt my trading style.
And you're sizing in a way that your stop loss kind of determines how much of your portfolio at any given time is in a trade, right? Because you're taking overall, you're shooting for 0.5% of your portfolio. So if you use a tighter stop, you can size larger, and that allows you to get more out of a really strong winning trade, just like you show here. Is that right? Anything to expand on? Never.
Yeah, exactly. So, but normally when you I think 1.5% is a really sweet spot. So if I'm risking 0.5% of my account, then the stop is 1.5%. I think I can get maybe 25% sizing. Maybe let me double check.
The quick math a trader's got to do. Yeah, no worries.
It's 20%.
Yeah.
So it's around 20% of my portfolio. So it's great. But sometimes I would use maybe only 1.2 or even 1% stop. So it will get me into the 25% portfolio sizing to even 30%. But sometimes I would take like maybe more risk. I risk maybe 0.6% or 0.7% of my portfolio. Then I can have a larger sizing for a 1.5% stop trade. And that's probably how I size my trades. And actually at the beginning of my journey or at the earlier stage of my trading journey, I didn't set my stop that tight. So
that's been a progression.
I remembered I remembered I used maybe 5 or even 6 or 7% stop in the earlier days. I gradually, especially after I came across Christian, and he always set the stop at the low of day, on the breakouts mostly or on the EPs. So his stop was setting pretty tight, maybe 3% or 2.5%. Then I start using them. I start really tightening my stop, and I think it really suits my style, my personality. I can can treat the losing streak quite well. So I'm not I won't be hesitate that much, or I'm really feeling afraid of entering new trades when I'm having a losing streak. Maybe it's the lessons that I learned, or maybe I experienced because of the 50% drawdown in the 2021. Yeah. I got really lots of losing trades in 2021. So, but yeah, I tightened my stop, and then I gradually further tighten them to maybe less than 2.5% or 2%. And then it really how I tweaked or slightly optimized a little bit, trying to adjust it based on my own personality and style. So I think this is also one of the key lessons that many new traders, because when you're just in the beginning of your journey, I think it's good to just copy other traders teach you or share. And then, but I think in the as you progress, as you trade more and have more experience and know more about on your own, then you should maybe adjust it a little bit to make it more suitable for you and develop your own style. And this is really important, I think.
Yeah, I think this is probably one of the most important slides that people can internalize. And you presented this last time too, and I think it's just such a great visualization of the power of tight stops and how that just helps you in many, many ways. Like you said, that helps on the psychology front as well, because you're not afraid of taking that next trade when you know, if I get stopped out, it's just going to be a small loss, a tiny loss. And I think people are going to see your raw performance numbers, 900+%, and assume that you're taking huge risks. You're risking 5%, 10% of your account in any one trade. But really what you're doing is risking very little with tight stops. You can get that upside when the trade works in your favor and sell into strength to de-risk. But if it goes against you, you're not suffering those big losses in a row that create the extremely volatile equity curves. So yeah, jump in if you agree with that or disagree on any points. I
do. But still, I think if you're trading with tight stop, you can still experience a very volatile equity curve, like I did, especially I think throughout the whole 2025, my equity curve is pretty volatile, I think. And I think also this is the upside for setting a tight stop, but there's also a lot of downside. So one of them is, will you encounter some behavioral slippage when you are having a huge a consecutive loss or a number of losing trades in a row or within the same day, especially on a huge, maybe after a gap down on a big gap down in the market. So your whole portfolio went down, and then at the same day you may face 3 or 5 losing trades in a row. Then it really sometimes will really significantly reduce your mental capital, and you will take a lot of random trades. And actually I did in December too. And so there are really a lot of also the downside for setting a tight stop, and as you would probably increase your number of trade and frequencies. And so it is not. I think it definitely not the best or it is the only way that you should set your stop or the only way that you trade. Just really need to like find you can try, but if it doesn't really suit you or you don't find it like mentally maybe comfortable of using a really tight stop, if it's really hard, then I think there's no point for like really setting a really tight stop and have a very low win rate style. So yeah, I think this is
You
also
gotta pick your poison.
I wanted to the reminder.
Yeah, for sure.
And
one more question I had related to that is, a lot of people wanted to hear about how much margin you used, and I'd love to hear your thoughts on that. Whether it's just about the market conditions, recent trade feedback, what factors you're incorporating in if you decide to use margin and how much. So yeah, if you could break down that for us, and if you cover that on another slide, please we can come back to that. But I think it's an important topic to cover.
Okay. Yeah. For margin, I didn't like look at that, like have a very serious metrics on how many margin that I use every day, every trading day, or I'm not going to like recording or like jotting them down. But I remembered I am like maybe 280% long in last year at most. So 100% is the full pot, and then I think at most it is 280% long, and this is like pretty huge, and the margin I'm taking, but I'm not like sizing into all positions at once. Right. So it really depends on both the market condition and also your own trade feedbacks. So if your existing positions are working well, and then you have been maybe selling the strength and then de-risking the previous trades, and the trade is working really well, and also the market is you can see the breadth is improving, it's above all the year base, and those market conditions I think is really worth it to like really take more. And actually, like it's a very natural progress. So if you're taking more new positions, then you will go up in your margin. So if as long as my position and the new trades are working well, then I am like keep entering it. Yeah. So the margin would be it's like as I also limit my risk per trade, then I know my like maybe the maximum drawdown for the whole portfolio. So I don't think I think you don't need to like do limit your like maximum like margin size or something. You just have to limit your maximum risk per trade, and then I think the trades would just handles it. Yeah.
And then one other question I had was, obviously you might have some trades that are more partials that you're trailing, but how many positions? There's a question that a lot of people ask. How many questions do you typically have at any one time? And again, there's that distinction between new positions versus trades that are trending and you've already de-risked. So that's maybe worth covering as well.
Both, it really like fluctuates across the whole year. But normally I think I would be in maybe three to four positions generally if the market is doing fine. But if the market is really trending, I may went up to maybe 6 or 7. I think when I was very like at the highest point of my on my margin, I'm in like 11 positions, I believe, and then I think I didn't like really look at the number of positions that I'm holding, but generally I would just enter 3 to 4 positions in maybe a day, and then I got stopped out from 1 or 2. So and I think last year most of the great opportunities comes in a day, and like comes in within the same day.
Mm-hmm.
So I remember the 1st of October is one of them. So I entered maybe 3 to 4 new positions, and then they all worked well. I didn't get stopped out. So, and I kept those 4, and then normally I'm just the market needs to like pull back, and then there will be another day that I can get a really tight risk entry, and then I got another maybe 2 or 3 new positions in, then trying to like pyramid my whole portfolio. I think it's kind of on that pattern.
Yeah. I think early September was kind of another period where just in a few days, all the quantum names took off all at once. So that might be a day that you're much more aggressive, jumping into trades. Perfect. Yeah, I don't think I have any more questions on this slide.
Yeah.
Martin, if you want to move on to the next one. Thank you.
Okay. Yeah, so I also include this in last year. I really want to like minimize the drawdown in 2025, but unfortunately I like failed this goal in the very last month of 2025. So there's a 26% drawdown in 2025, in December 2025, and this is a little bit disappointing, and I think I could have done much better if I didn't make those mistakes that I'm going to cover later. And this is still my number one goal for me in the coming 2026 too. So I really want to like to limit the drawdown below 20, or I think below 15% is my optimum goal, ultimate goal. And yeah, this is really sad, especially although I'm doing pretty good in the first 11 months, but when you are having a disastrous December, then it just feels like most of the progress has wiped out, and you are just going to start from the zero again. So so I think in December I just didn't trade that well, and then this is a key lesson. And I think part of the reason is I do pretty well in the first maybe 11 months, although I also made some mistakes in the first 11 months, but the market is pretty good, and when the market is good, it rarely it didn't punish you that much. But in a choppy market environment like December, then the punishment would start kicking in. Yeah. And then it always has those maybe alarms or the lessons given by the markets when you're feeling relaxed and not really at trading in your best condition.
Yeah, the clear uptrends, the clear downtrends, those are either easier to step aside or participate in, on the right side. Mm-hmm. But the choppier markets, that's where it's dangerous for traders who are managing risk tightly, just like your style. It's great that you can have a 900+% year and still have things to work on, Martin. So you can look at it on the bright side that way. You've always got and you've got so much time to improve again. So these are some great lessons.
Sure. Yes. So December, I'm talking about it. Let's talk about the drawdowns, and just if I'm going to summarize it, December, this is overtrading, and then you can see the table below. So I take around maybe around 70, 80 trades in December, and you can see 46% of the trades I think is really bad trades. But when I mean bad, that I think I shouldn't have taken it in the beginning. So lots of them are I think a little bit random trades, and I'm not really like following generally when I'm trading the pullbacks, I'm going to wait at least on the daily 9 EMA. But some of the trades that I take on the short side, I'm just going to short maybe on the pullbacks on the hourly, maybe hourly 21. So it's not even on the daily 9 EMA. And so those trades that, because I really wanted to maybe make back my losses, so it's like revenge trading a little bit, but also I'm flipping between long and shorts in December. I think maybe twice, because I think I did it flipping twice or 3 times. So those I'm not trading I'm not realizing that it is the time for me to like get really sit out and sit back. So I keep trading, and you can see on the first part, on the first paragraph, that for the when I am flipping between the longs and shorts, and I think if my shorts are not working, and then I got stopped out, and then should I switch to the long side as the short is not working, and then I try the long positions, and then they are also getting stopped out, and then I switch back to the shorts. So it becomes like a vicious cycle. So I keep jumping between longs and shorts, but they don't have much follow through, and then I just got punched in both, like slapped in both ways. So I will also include some losing trades in December in the later part too. But so you can see like half of the December trades is, I think, could be avoided and should have been taken. Then if I am like really trading, like avoiding those trades, then I probably could like reduce my drawdown maybe into half, or maybe into half or even more. I think these kind of the trades that I really wanted to avoid in 2026. But it's like easier said than done. Like when you are really mentally frustrated, or when you're really in that situation, sometimes you just didn't acknowledge that you are doing the wrong thing. So I'm still improving. I'm trying to. So one of the goal that I wanted to take, when I wanted to achieve in this year, would be take less trades, especially on the short side too. So yes, I'll go through them later, and then so the first part is the flipping between the longs and shorts, and the second one, it would be being a little bit too bearish in December. So a lot of this, like the small and micro caps, especially most of them are these speculative names, like you can call them shitcoins. Then they are not doing well in December. So many of them will start losing the EMAs and then trending down, even in late November. And then because I have a small and micro caps watch list, so I track a lot of these small and micro caps, and then I saw, there are a lot of stocks that are going the wrong way. They're gapping down. They are rejecting from their EMAs. So I think the market is like deteriorating, and in fact it is deteriorating, but it doesn't mean that the whole market or the general market is going down. So there at the same time, there are also many new leaders that are still, like especially the memory names, they're still trending up really nicely, or the metals names. So I put like too much emphasis on them, and also I like ignore the fact that most of them are going to they're going to return to their fair values. So most of them are just like the pump and dump stocks when the crowd like goes away, then it just like phase out
It loses
eventually.
momentum, yeah.
And yeah, and also at the same time, like IWM is still like outperforming the Qs or the SPY, and IWM is like really trending the 9 EMA and also they're really the EMAs are really trending up. So the general market is not actually that weak, and that it just like should not be the very aggressive moments to really like size up or like trading a lot on the short side, and also the long side too. I think if the market breadth is like declining, so the like best way to do would be like trading less. So really wanted to reduce the number of trade this year too. Yeah. And for the third point, it would be the choppy market condition. Some of the new trades that I took in December will have maybe 1 or 2 days follow through, but it's just a very little follow through. It just maybe goes up 4 or 5 or 6% from my stops, and then it reverses back. Then I failed to take the partials then because I wanted to take my partials maybe above at least 3R or even 5R. Then I just failed to take the partials when it just went up maybe only 5 to 6%, and then think and personally I don't want it to like switch my like the profit taking rules, so I should take the partials maybe earlier, maybe when it just went up 1 hour. I think comparatively compared to that, I think I should just like trade less and just avoiding trading in those choppy market conditions. Yeah, that's probably the summarize the December drawdown, and there will be some trade examples later.
Yeah. It's always hard not to draw down some in choppy markets for sure. Have you thought at all about, and I don't know if you already do this, but cutting size a little bit? I know you're flipping long and short, but do you size down a little bit or risk a little bit less per trade when you're getting kind of that negative feedback, or is that something that you're considering implementing in the future?
Yeah, I did size down. So I think if you can see the equity curve is like getting a
shallower,
shallower and shallower pullbacks, but it's still like the first few days that I'm like switching. The first few days that I'm switching
right.
between short side and the long side, it really like damaged quite a lot at the beginning. So yeah. And so okay, so let's talk about the pullbacks that I trade more often this year. And I just observed that it's especially like in the first maybe 30 to maybe the first 30 minutes after the market opened, the stocks tends to like especially the stocks that is gapping higher pre-market or at the open, it tends to like get slammed and reverses and takes out the low of day and even takes out the low of maybe the all of the shorter time frame EMA, but it eventually would find support and then goes back to the original direction. So this two chart is I think pretty commonly seen in 2025. So many of the stocks that really gaps up and then just reject it and then goes straight down right at the gate, and or you may see something like it gets a good breakout, opening range breakouts in the first maybe 15 minutes, and then it just reverses and it stops you out at the low of day. But at the later part of the day, it just it sets up again and then finds supports and breaks out. It takes out the original opening range highs and goes back up. And then this is the intraday, like the intraday chart, and on the daily chart too. there are a lot of the pullbacks into the daily 9 EMA or 21 EMA on the anchor VWAP or the prior highs or lows before they really going starting a new uptrend. And I think after I have seen many examples of those like the good pullbacks, and then I feeling like, oh, should I like trading more on those levels instead of trading the breakouts. And then so in May I wrote in a post in Twitter, in X. So I also explained my entry, the entry tactics on the pullback buys, also the pullback short too. So if you guys are interested, you can take a look in this post. So I think pullbacks generally provides more low risk entry points, and also the stop is tighter too. I think as I'm I will go through the intraday entries, so you will maybe understand more about the tighter stop intraday especially. And then buying pullbacks also prevent me chasing the stocks. So sometimes the stock is breaking out, even though they are kind of extended from the moving average. But when you're buying pullbacks, generally, and most, I think 99% of the time, they're pulling back into the EMAs or into the support level that is not extended from any of the key levels, and they are not maybe at the prior swing high or even the all-time highs when you're trading breakouts. And then I think it also improves the entry level, so the average price too. So when you can enter the stock at a lower price, at a better entry compared to breakouts. So normally when you're trading breakouts, you're buying at the breakouts of maybe the previous day high, previous week high, or any like major resistance area. So you're buying it at a higher price. The pullbacks, you can have you generally would buy at a support level which is lower than the resistance level if you're trading longs. So this is these are kind of the like the advantage of buying pullbacks. Yes, and especially when the markets last year, I think the stock really, like when they are finding when they're really pulling back into the maybe the 9 EMA or the support levels, they just they just go up, and then they are not like chopping around in the support areas. So they're really clean. So a sharp, if a touch to the support level, and they are reversing and just going higher right after just a touch of the pullback level. So it makes me like trade to like switching more focus to the pullbacks in 2025. But if the situation like gets changed, maybe next year or this year, so the stocks would like chopping around in the support level or in those areas before another leg higher, then I'm going to like trade less and then focusing more on the breakouts maybe. So I really wanted to find the best, like being in sync with the markets and going with the flow with the market, and find the best entry tactics over time. But all in all, I think I'm going to like keep trading the same way as I'm trying to set a tight stop and have a low win rate strategy, a style. I think that won't change. But for the entry points or the setup that took that I could like change or adjust by the market condition.
Yeah, I think Mark Minervini in one of my interviews with him talked about something similar, where he really tries to identify the technical theme of the moment, what's working, and that could be a setup, that could be a character of the market where breakouts aren't following through. It's like a pop and drop environment. And here you're kind of talking about how last year was much better suited for pullbacks versus just buying the range breakout, like people normally do. So that makes perfect sense to me. One question I did have, Martin, is
Mm-hmm.
what does the daily chart, and you're going to go through some examples, so feel free to flip to those to go through it, but obviously you don't want to buy a pullback in the middle of nowhere. You want to wait for the pattern to be mature enough that it's kind of ready for what you're talking about, where it's a quick dip to the moving average or support level, and then like you're getting follow through the next day almost, or like the day after that. So again, if you're going to go through some examples to show that, feel free to flip to that. But I think that'd be a really important thing to talk about, is like, what does the setup have to look like for you to say, okay, I'm focused on a pullback by undercutting the prior day low that lines up with the 21 EMA, that lines up with this level. I'm focused on the next day if it presents an opportunity.
Mm-hmm. Yeah. Great. Sure. So before going into the chart, I think I also wanted to introduce the angle VWAP from because I use a lot of angle VWAP when buying pullbacks, and it use angle VWAP much more often this year, and I think it works really well from the past 2 or 3 years for a potential support or resistance level. And I learned the angle VWAP from your interview with Brian Shannon.
He's the man.
And then he's the man. And I learned a lot I think there are another interview earlier, maybe 3 or 4 years ago. So he also introduced the angle VWAP, and I go through it too. And I just tried a little bit, and I think, it works really well. And when I'm just plotting them into the charts, so I start using them more and more. And so I just wanted to emphasize on this indicator that I use very commonly this year. So maybe let's jump into the charts and
let's do it. And you use the anchor VWAP on all time frames as a like daily key level as well as intraday for support and resistance. Is that right?
Yes. I think mostly maybe 80 to 90% of the time I'm going to use it. I would set this. I would anchor it into the a daily
level,
into the daily candle. But still, I'm going to look at for the hourly or even the intraday charts. I'm going to have the anchor VWAP present in the intraday chart too, so I can get a really more sophisticated presentation, or the picture for the intraday chart too. So generally, I think Brian also introduced them to where to put the anchors at, and for me personally, I preferred to put it in the swing high or the swing lows of a base. So, for example, for this IONQ base, this is a pretty long base, I would say. Generally, I'm going to put it at the swing high. So this is the very high, the highest point for this base. So it start to form the base right after it formed this swing high, and then the price. So you can see it reacts to the angle VWAP pretty actively, and you can access the supports here, maybe a support here, and you can also see the resistance here, and then you can see, I would say maybe not this day, and then it will be this day will also be a good pullback buy. So you even if you miss this day, so this day I think it's this more a 21 EMA or a 9 EMA pullback, but it's a really a deep pullback. So I don't think this is a really good entry but if you're missing this pullback, then you can buy another one the next day. So it pulls back into the anchor VWAP, also the 9 EMA, and actually it also near the previous swing high too, like those highs in the hourly chart.
The levels
believe.
lining up together at one spot, basically. Yeah.
Yes. So yes, around these levels. So when the support level are lining up, those are the really key levels that I wanted to engage in, and you can have an edge. You will have the highest edge if you're buying those areas. So if a trader buys at the anchor VWAP, and also there are another trader buys at the 9 EMA, and another one buys at the previous highs or any support level, then you can, like, there would be the highest probability point that the stock will find supports at. So for anchor VWAP, I really find it very useful, especially on a break and retest within a base. So this is a kind of a huge base. So I think I would say the Friday 9th of May, this pullback is really good on a daily charts. This is one of the example, and actually you can see the stocks find another support at the 150 EMA and the anchor VWAP at August 2. I don't know whether it's a coincidence or not, but at least it is reacting to the anchor VWAP and also the 150. So they, when like those support level really coincide or really come close to each other, those areas is where you should put your focus on. And then this is one of the examples, and sometimes I will put it on the maybe a gap up or a gap down day on a huge volume. So for example, like this day here, but it is really similar to the swing high here. So I think this is very similar, not much difference. And sometimes I would also if you're like if you're anchoring to this swing high, so you can see this is maybe the first or the second higher low for this space. If you are ignoring this part, so what if I'm setting to here or here? So if I'm setting to here, so you can see the price is also rejecting the anchor VWAP, and then there's another like a pullback opportunities when the stock is gapping down into the rising maybe 50 and the 21 and also the anchor VWAP, and then it finds supports. So it just provides you a really good like support or resistance level that the stock is going to react quite actively. And
just so can I jump in just real quick, Martin? For folks who aren't familiar with the indicator, one, I highly recommend watching the videos, and we'll kind of link them down below from Brian, because he's fantastic at explaining it. But anchor VWAP just stands for, or VWAP stands for anchored volume weighted average price. So what it's doing is aggregating the prices versus the volume since a certain day in time, and that's what you're anchoring it to. So basically what it shows is, are buyers or sellers net in control since a period, and that flip often coincides with a great entry opportunities up the right hand side of the base, which is what kind of Martin was highlighting multiple times, up the right hand side of IONQ here from this base. Martin, anything you'd add from your side about why you find it meaningful, or anything you want to add on the indicator?
Thanks for the explanation, Richard. And I didn't like. I think that's it. That's probably that's it for the explanation for anchor VWAP. But the very the important message that I wanted to show is the price is really reacting. I actually like if the indicator is, I don't care if the indicator is really like fancy or really like the formula behind it, like
it's gotta work.
It's important to know. It's important to know the basic part of it, but the most important part is whether the price is reacting and whether it really works. So I think anchor VWAP works really well in the recent days. So this is one of the the examples. And if you're going back further, actually for maybe for this short side too. So not all apart from the swing high, you can also anchor it to the swing lows. So if I'm anchoring it to this swing low here for this small little base, or the small little not small, but this consolidation, this base area, then you can see this is a really good entry for this pullback, the short. But you can see the price reacts to the 50 EMA and also to the anchor VWAP, and they found resistance, and the EMAs are trending down. So they just find the resistance right at the anchor VWAP, and then it starts trending down. So it's not only working on the long side, it's also working on the short side too.
And Mark, sorry to jump in, and it might just be me because I might be colorblind, but would you be able to double click your anchored VWAP and just make it maybe bright orange or something? Yeah,
sure.
just so it's really clear for people who are looking at it. Yeah, or white, maybe increase the thickness even just for purposes. Yeah, there we go. Now we can really see it. Perfect. Yeah, thank you. Yeah, all that's good.
Yep.
That's all good.
Okay.
Thank you.
Okay. Yeah. And then it works really well.
And that higher low was caught with the anchor VWAP as well. Right after
Yeah. Right after
exactly.
this one?
Yeah.
This one? This higher low or this one?
Yeah, that one.
Okay. Yeah, that's true. And yeah, so it's not I will also put it on the swing low if I'm trying to short, to find some short ideas. And so it's really the opposite from the long side. And okay, then yeah, that's IONQ. But also for if you are going back earlier days, so anchor VWAP is also working. It also worked. Maybe back into the 2006 for Nvidia. So Nvidia had a 50% drawdown nearly in 2006. So if you're putting anchor VWAP into this swing high before this huge downtrend, then you can see the price just found support after it breaks out. So I think this pattern just is really commonly seen. So it breaks out from the anchor VWAP, and then it pulls back. Normally, the best timing for you to buy in pullback will be the first pullback into the support level. So it's pulling back into the 150 EMA, and you can see the 21 or the 52, and also the anchor VWAP, those levels. So and find support, and that rally backs into the 9 EMA, and then it starts another uptrend after it. And definitely, there's also a really good breakout entry here too. I think this is a really tight entry too, a really inside bar, and then a breakout. And so I think pullbacks and breakouts are not on the completely opposite side of trading, but they can really
they can work together,
come along with each other. Yeah. So I think I am not going to only trading breakouts or only trading pullbacks, but it just it really depends on the market condition. And it learning pullbacks just gives me another more potential entry points, and which can limit my risk very tightly. So yeah, I really like this break and retest. Yeah, it's really, really common. So you will see more examples, I believe. And yeah, so it works back in 2006. And also another one, I think on this one here. And you can say I'm not setting the anchor VWAP at the very the swing high, the highest parts of this this pop here. So the highest price bar will be this candle, But why I'm going to to set it to this this bar here is the price just reacts to this angle of VWAP more
during the downtrend. During the downtrend portion.
More effectively. Yeah. So that is the first rejection, the second one, and also the third one. And so that's why sometimes I'm going to adjust it a little bit to find the best candle which the price would respect the most. And it's not the you have to put it into the lowest candle or the highest candle of the of a base. And I personally would just really maybe tweak or adjust it a little bit to make it more the most effective one.
Could you change that? Sorry to make you do this again. Could you change that color to just so it's because it might be hard for a few people watching on small phones and stuff. Yeah,
I agree too, but I don't know how to set.
I think the ones you've already got got there. Yeah, that's perfect. That's perfect. So you can see the rejection.
Oh! I got it. Okay, I got it. So yep, this will be another one, and you can see there is a retest on the of this breakout after this breakout, and near the 50 EMA, also above the 9 EMA when the EMA starts crossing back, when the 9 is above the 21 too. And this is I believe in those areas, if you're trading a breakout, you just can't get a very tight entry. I think these 2 days, for this day, it just
faded.
It maybe works in the first hour or the first or the second hour, and it just fades at the right back to the 50 EMA. But if you're trading pullbacks, then you may catch this Nvidia uptrend on this pullback here. So so sometimes it's just there are breakouts and pullbacks are going sometimes you have more opportunities on the breakouts, and sometimes you have more opportunities on the pullbacks, and it just allows you to enter the strong names more often, and you have more entry points on getting the stocks if that you really wanted to get in, especially maybe it's on a hot theme, maybe it's really strong, or you have really high conviction into one stocks. So that is another example for the angle of pullback.
A few questions on that one, Martin. Sorry. Could you break down the base bottoming process too? Because you've got constructive price and volume action at the bottom there, where it goes tight, it pops higher, and then starts forming the lower highs. Are you looking for maybe to act around that first higher low or second higher low as it flips above the anchor VWAP and retest it from below? Could you just kind of break down this example a little bit more, starting from that kind of base bombing process? That'd be great.
That's a really good question. And I'm not going to randomly buying any pullbacks or any pullbacks into the anchor VWAP or any EMAs. So it's very, very true that this pop here is really a change of character. That gets on
your radar, right? That catches your attention. Yeah.
Although I'm not trading in 2007, I'm sure that it would get into my radar, and it's really a strong move and a huge buying huge green bar, which is up 8% and close above the 50 EMA, and this is a really, really strong one. So then it pulls back and forms the higher lows, and then the EMA starts crossing back. So this is maybe it's called a wedge pop from
Oliver,
Oliver Kell. So and this is the first green, the green shoots or a green or a sign, a bullish sign that a stock may be bottoming and starting another uptrend. And I think maybe so. Apart from buying the pullbacks into the anchor VWAP here, and I personally think, although I'm trading in hindsight, but a pullback into both the 9 and 21 EMA, where the 9 is above 21, and they are very close to each other. And that is an area that I would like also focus on, because if the markets, if the Nvidia is really starting a new uptrend, generally it has to find support on the rising EMAs. So if it's working, that if it's starting a new uptrend, then it's probably a good level that I can find an entry. And if I'm right, it's probably not starting a new uptrend and gets rejected by the declining maybe 50 or the declining anchor VWAP, and starting a new uptrend and goes further down. So it's a really like a crucial level that I can have tried, and if it just test it whether it works out or not. And yeah, I think this is also a good pullback by day, for especially it's not gapping up, but it's pulling back into the EMAs intraday. So I really love the stock that is gapping up or like climbs higher. In reverse. So rather than no, so I really love the stock that is gapping up and then reverses, or just the stock is opening lower and then just go down and just falling into the support level, such as the EMAs for this case, or sometimes the anchor VWAP. Rather than like is opening maybe rather than opening weak and then it just climbs right back. I really love the like it's pulling back and then it's a V-shaped recovery, and from the like a touch and go actions from the stocks. So maybe you will see more examples for that too. And yeah, this is Nvidia. So this is Tesla, and I did a arrow here that I think I annotated previously. So it's just a pulls back in the downtrend. It is a pullback in the downtrend to the 2021 EMA, and so this one it gaps higher and then it pops up a little bit. Then I think it faced just maybe intraday, because I'm trading in the Hong Kong time zone, in the Asia time zone. So I really wanted to see the stock reverses in the earlier, maybe 1 or 2 hour after the market open. So so I think this one works I think pretty well. And then if you're like anchoring a anchor VWAP to this swing high, I believe it just touches the anchor VWAP. So it overshoots the 21 EMA and then touches the anchor VWAP, just get rejected and then goes straight down afterwards. So this is a really good clean in on both declining 21 EMA and also the anchor VWAP. And they both when they really came close to each other, and the price is the stock is on a really strong downtrend, and it is the second time that is going to touch to rally back into the anchor VWAP. So I think this is a really good entry for the short side. Oh, yeah, this looks better. Yeah, and this is a really clean one. Yep. So are there any other ones? Yeah, actually I don't like I'm in my leisure time, or I'm just flipping around the charts or playing around the charts. I'm just trying to put the anchor VWAP anywhere that let's try this. This one looks pretty well too, I think. And then the price consolidates near the anchor VWAP, and then there's a breakout on this kind of a tight range or an inside bar, but not it's very. But I think this candle is really strong. It's undercut and reclaim of the 9 EMA, and then a breakout from from the anchor VWAP and also the previous swing high here. So this is a really good breakout entry too. And so you can see the price is also like reacting pretty actively to the anchor VWAP, especially for this for long base. And I just found them. So sometimes I'm just going to randomly plot the anchor VWAP, so whether to see whether it works or not. And then also this one doesn't work that well. And then I'm going. So okay. So then I'm not going to. So sometimes when you are trading, so if you're trading Tesla, maybe here, then you can, if you want to spot any like potential anchor VWAP entry, then I'm just putting it here. Then I don't think this is working that well in this right part of the base. But one thing that you can notice is starting to find support on the EMAs, and if there's a breakout from this candle, from this base, then it is above the anchor VWAP, which is bullish, I consider. So although it doesn't like provide very good pullback buy entry in my opinion, but if you use an anchor VWAP from a within a base, then you can determine whether the stock is like
respecting it,
basing like constructively, and may set up another uptrend. And so comparatively, if the stock is like basing below the anchor VWAP or basing below the EMAs, then it's not a very good spot like to take the long entries, maybe. So yeah, this is also how I would use the anchor VWAP apart from buying the pullbacks. Yeah. So another one will be SNDK. So I'm going. So yeah, SNDK, and this one I wanted to focus more on this part here. So I put it on this swing high, and then definitely there's a opportunity for a pullback buy here, like is near the 21 EMA and also the anchor VWAP here. But I want to focus more on this anchor VWAP, like multiple touches on the anchor VWAP below the EMAs. So although I don't think I would trade alongside for SNDK over this like this small consolidation area, but the constant, like the multiple touches of the anchor VWAP, and it finds supports like every time when it really undercuts the anchor VWAP, and then it finds supports. So and then I switch. If we are switching to the weekly charts, it actually showing that in the weekly chart, the 9 is still above the 21 EMA. So in the weekly, it doesn't look that bad, and the EMA is still like trending up for the 21, or maybe flattening, but still the 9 is still above the 21. And then furthermore, if the price is like respecting the anchor VWAP and finds supports from it, then I think this is a really a earlier tell or earlier sign that SNDK may be an emerging leader that could start another uptrend, as this finds support like 4 consecutive weeks. So sometimes when the daily chart looks ugly, but the anchor VWAP would like gives you maybe a different perspective. If it's like it could be another, like it could be basing very constructively, and it could be setting up. So this one is working really well for SNDK. So but I personally, I don't think I could buy this. I could buy SNDK here, but I'm definitely not going to like put it into the very bearish or trading shorts on the SNDK. If I have this anchor VWAP on, and then I can know that it finds supports here, and the weekly is looking fine. It's looking not bad. So it also helps to clarify the stock, like understand the big picture a little bit more.
And Martin, when you're looking through charts on the weekend, Are you looking at the weekly and daily together? How are you flipping back and forth again to kind of get that bigger picture, like you said, to get that full perspective?
Yep. I really like to look at the weekly chart. Especially when the stock is like basing. So it's like, especially in these consolidation areas, there's really the EMAs are really converging and really packed. And then I would love to look at the weekly. And so generally, if when the stock is like building a base or like pulling back, so it's on a down, like on a kind of a short-term downtrend, then I would love to see if what levels that the stock is pulling back to. Mostly, for example, maybe SMDK here. So please ignore the annotation. And for this pullback here, then you can see this. Although it looks pretty ugly on the daily, so it just snaps the huge red candle, close way below the 21. And then looks like it's like getting very ugly for a breakdown from this like a topping pattern here. But still on a like if you're looking on the weekly chart, it's still way above the 9 EMA.
Right.
So so SNDK is, although like this day is really bad, but we should not be that like bearish, or I should not taking it away from my like a radar. It could very potentially set up again as the weekly is still in the uptrend.
Right.
And so a few weeks later, especially this like this candle, it undercuts the 9 EMA weekly 9, and then it snaps right back and it closes really strong near the high of the week. So on the daily, it doesn't like show much of that strength if you're just looking at the daily. So maybe you can see there are some bounce from the 50 EMA, but it doesn't really like show you that how the stock is like actually reacting to the weekly on the weekly charts. So on the daily chart, the stock is still like chopping around at the 21 or the 9 EMA, especially when they are below them. So sometimes I think I also make some mistakes when I'm like shorting the stocks. Sometimes I'm going to short the stock just right after it loses the 21 or just loses the 9. But on the higher time frame, that is actually basing pretty well, and it could potentially find support very close, like on the 9 on the weekly 9 EMA. So it may not be a very good spot to set up a short entry just solely from the daily 9 or daily 21 or even the daily 50 EMA. So that's how I use the weekly. Sometimes the weekly really gives you a clearer picture compared to the daily chart. And then SNDK just sets up again, and then they have a really good kind of a couple of handle breakout, and it really clean breakouts on this Friday on the 2nd of January. And yeah, that's how I use the weekly chart.
Mm-hmm. Excellent.
And yeah, so for SNDK, I think I will also anchor the anchor VWAP maybe here, so I will keep tracking the reaction on the stock, how the stock reacts to the anchor VWAP, and it really like catches my attention when the stock breaks out and then consolidate above the anchor VWAP, and this is a really strong sign to me. So you can see there's also to take like a pullback to the anchor VWAP that works, and then that I also very close to the 9 EMA too, so it could also be like a potential entry. But I just didn't take it, and this break and retest just works just everywhere, I think, and it really works pretty well in my opinion.
Mm-hmm.
Yeah, so for BE, this is a really recent example. Just also like putting anchor VWAP to this swing high, and then there's a breakout above the anchor VWAP, and then a pullback, and then it just found support and closes above the EMAs and also above the anchor VWAP. I think this is also a very good pullback opportunity, and another one would be this small little gap here. For this pullback is closing the Monday gap. So this is also, I think, the unfilled gaps is also a key level that the price could find support or resistance at. And this is also the key level that I will watch closely. So these three, the angle VWAP, the gap, and also the 50, the EMAs are trying to really close to each other, and the 9 is, and the 21, on the 52 is like shaping up. But these three acts together, it just gives this entry a really, really good and multiple edge entry. So I think this one is a really good one too. It's a really good one too, yeah.
And then once you spot an opportunity like that where it broke above the anchor VWAP, you see that it's undercutting it, that's when you shift over to the intraday chart and look to find a spot to manage risk against on that lower time frame. Is that pretty much your process?
Yes, correct. And so I can share the intraday entry a little bit here, maybe in B. So oops, it's not on the 5-minute candle. 5-minute charts. So this I believe this pullback for BE is I think I won't like this would be I'm not going to take it because it's like rallying in the later part of the day, which I probably is sleeping in Hong Kong. So but
you like that flush during the morning, right? You like a flush during the morning.
Yeah, I like that flush during the morning. Yeah. But I would prefer a immediate recovery, right? Not around gradual. Like slow, gentle, gradual recovery in the later part of the day, because I just can't trade those late day recovery. But I also love because a V-shaped recovery shows how the buyers are stepping in just when it touches the support level. So the faster it rebound, I think the stronger the stock is, and so this is not a really good intraday sample. I think let me share this in another one. But on the daily, it really looks really good. Mm-hmm. So if BE is like flushing down, and then maybe on the second or the third candle it rallies back, then it would be a really good entry for me. So maybe another one. Okay, so this one is open. Yeah, I think this one is a little bit different. So I just apart from setting my angle view up to the prior for a swing high here maybe, and you can see the price is not really touching the angle view up. So actually I didn't like prep this in advance. So for some, if I'm seeing these kind of scenarios, I may go to the maybe hourly charts. So out in the hourly chart, you can see the angle VWAP is setting in the first candle of the day. Then, but as the price is not like respecting this angle VWAP that effectively that much, and then I would try to like maybe adjust it a little bit to this bar here is the reversal bar, and this is the bar with the swing high. So I'm going to put this in, and it works better, but still not perfect, right? But at least the price like found some reacts to this angle VWAP at the right side of this angle VWAP. And I personally think I am going to trying to match the angle VWAP to the most number of the reaction points possible. Yep. So I may further maybe put it into this bar here, the second day, after the top. So I think this worked better, and then So if I'm trading live, like if I'm trading back in the August, I'm going to set the angle VWAP like this instead of putting it at the very beginning on the daily chart, which the price doesn't show respect to this angle VWAP.
Mm-hmm.
And then that's how I like to adjust the angle VWAP and like for it in the intraday sometimes. So yes, it's really like it's really
It's an art.
want to yep, and find the best angle VWAP that the price reacts the most and respect the most. So yeah, and you can see the another one would be this angle VWAP too. If you are setting the angle VWAP into the swing low here, so in the hourly chart, so the price doesn't like respect that much, especially on this like the prior pullbacks, and it's actually not the really swing low in intraday. So if you're putting it into the swing low in the intraday here, and then you can find it, the price reacts better, and it finds a good entry, a really nice entry on the hourly 50 EMA and also the anchor VWAP from the swing low. So when this really coincides, and this is a really clean support level that I will focus on, then yeah, so that's how I like to adjust the anchor for the VWAP.
Mm-hmm.
And you can see the price find support on the 50 and the anchor VWAP again too. So I don't know, like it just like, but it just works really well. So the last one is TAM, and yeah, I think this one is also by setting it into the swing low, is a really, and also it is a really like important bar. It's really like a huge green bar in a reversal,
right?
Huge reversal from the downside, and it shows a good support. And I think this is a really important candle to determine whether the stock is like really finding support and starting another uptrend or not. So sometimes I would also anchor it to some huge gap ups or huge gap downs, and then if I'm just anchoring the VWAP to this day, so you can see the prices that consolidate above or very near, just barely up below this VWAP, and the EMAs are really like pretty close to each other. The 9 and the 21, they're really packed. So and on this day, on the 13th of August, it opens green, so it's a gap up day, and then it pulls back. I think on the hourly chart it looks better, and it opens green, and then it pulls back into the anchor VWAP. Also in the daily, on daily it pulls back into the 21 EMA, and these levels are really close to it, are really coincide, and they're really close, and the price found support, and then it breaks out to the upside and start an uptrend. So if you're buying it into this area, the stop is really, really tight, maybe less than 2%. And if you're wrong, then it probably means that it's not finding strength, it's not going higher from here. Either it needs more time or it's just going down right after it. And then I think this kind of the entry, the pullback entries, just have like countless examples if you're just plotting them into the random charts. So yeah, and maybe we can zoom in and look at the potential entries for the 5 minute. Is it possible?
I think it's too far back.
I don't. Is it this one, or I don't think so. This one is on the 5th of August. Okay. I believe this is on this day here, I believe. So on the 5 minute, the anchor VWAP doesn't fit that well. So it's like that's why I'm not using the anchor VWAP in the 5 minute time frame at the very beginning. So I'm just I think the price reacts the most to the daily or the hourly, and then they are the really good time frames that you can use the anchor VWAP for for a really multi-day anchor VWAP. That is not an intraday. So I would use the intraday anchor VWAP on the lower time frame, maybe 1 minute or 5 minute time frame. But for a multi-day anchor VWAP, I am using it mostly on the 1 hour or on the weekly. So I believe it's this pullback here, and you can see the stock breaks out at the opening range highs, I believe, and then it reverses. So around 30 minutes after the market open, and I think it takes out the opening range lows, just barely takes out the opening range lows. And if I'm support, and then I am going to because we have already defined that the potential the levels that the stock is it this day? 8th of let me double check, sorry. Also it's 13. What? Oh no, it's 2024. So yeah, sorry that I think
it's too far.
I think this is another. Yeah, too far.
All good. All good.
So all good. Okay.
I love on the daily, by the way. If you could go back, just how tight those 2 days were, right at that point before the expansion, and like you said, you've got that super powerful reversal up, and then it just goes quiet and tight with all the moving averages coiled. And I think this is like an 80% move in 6-7 days. I'm pretty sure this is a awesome IPO move.
Yes, exactly. Oops, actually, we can try this replay function. We may have the 5 minute chart there. Oh yeah, I think this one.
Yeah, so that's the tightness. Yep, and then that's the breakout on the right there. Yeah.
I think this one. I think this is the A or the. Oops. I think it's this one, right here. So, is this? I'm sorry.
Yeah, no worries. No
worries. The 30. Okay. Yeah. So, okay. This one is pretty clean, even for the breakout too. So, I think this one is a little bit hard. It's not. Yeah, I think this is fine. I think I would explain my intraday entry on another example. But yeah, okay.
Yeah, no problem.
That's the example for pullbacks. Then should we go through? Should we start talking about my winners and losers in 2025?
Let's do it. Yeah.
So yeah, I love starting with the losers first.
Get those out of the way. Yeah.
Yes. Yes, and then I really think the losers would would give you more benefits than the winners in improving your trading, not in the P&L wise, just in trading. So this one I took the long in UPST, and I bought it I don't know, in the middle of nowhere, and then it just a pullback into the hourly EMAs, hourly 21 EMAs, and then I think it's also the previous swing high, I believe, in from my a perspective. I think that's what I'm thinking about when I'm buying this pullback. And then but I don't think on hindsight, I think this one is too extended, and the right side of this base is not that clean and long enough for another breakout. So I think for a pullback buy, I prefer at least to be close to the 9 EMA, or I think this one is a little bit too aggressive for the entry wise, and then especially has been going up for several weeks, and it doesn't have a really a long consolidation except here, but sometimes I think in a very good market environment, then it may continue riding the 9 EMA to go up. But like I think in most of the time, that these kind of entries are too aggressive and doesn't work that well. Like it has a lower win rate comparatively, compared to a pullback buy within a base or just earlier, like the first break and retest of a base. So this is not I think this is a really not a good trade, and I should have be more conservative for this entry, especially the market has been going up for several since April from this bottom, and then it's not a really good time to be very aggressive to take new position and buying at the kind of extended area. Yeah, that's my thought on this losing trade.
So you were just stopped out the next day or the day after that, pretty much, on this one? Yeah.
This one, yes, I think the next day after.
Yep.
The next day, yes. So for QS, I believe this one I bought it at this candle. It's right after the two tight candle, inside bar, and then I bought I believe this is a pullback. So if you zoom into the hourly chart, so it gaps up and then it pulls back into the rising 9 and also the rising 21, and then I bought the 5-minute breakout, or I think it's the 5-minute breakouts. Oops, it will be the 1 minute. Yes, I believe I bought this 1 minute breakouts for the previous bar high, and then this is like the just forget about the daily, the daily chart. Just solely for the intraday chart. So normally I would look for a really fast a flush to the downside into the support level, which is on the hourly 9 and the 21 EMA. Is it the 9 or 21? Yeah, a 9 and 21 EMA in the hourly. And then I will look at the 1 minute or the 5 minute or the 15-minute candle for the first breakout of the previous bar high. Okay, so this candle I entered it at around here, but I think there's a slip page, or I just entered it a little bit late. Then but the trigger point is the breakout of the previous bar high. And this time I'm using 1 minute chart. Not because normally for the first 15 minutes before market open, if I'm buying a pullback and a reversal, then I'm using the 1 minute candle breakout. For 15 minutes to maybe 16 minutes after the market open, and I'm using the 5-minute candle breakout. So it's the same. I'm just switching to the 5-minute chart and wait for the breakout of the previous bar high. Then I may enter it at this level, on this bar, and it's all about the intraday breakout of the previous bar high. And so this is the 1 minute chart example, and then I'm going to set the stop either at the low of day. I think maybe 60 to 70% at the low of day. But sometimes the stop may be too wide, or I just really wanted to tighten my stop, then I may set it to the low of the breakout bar or the low of the previous bar. So this is not really the hard a strict rule that I have to put the stop at the low of day or the low of the breakout bar. It just really depends on how tight the candle is, or I sometimes would adjust this. Yeah, maybe I sometimes I don't know how I set my stop, and normally it would be if the bar is really wide, if this this red bar have a really huge down wick, so it finds support maybe at the 150 at these areas, and then I'm buying this 1 minute breakout, the stop may be a little bit too wide for me, and then I'm going to set the stop at this candle low or this candle low,
right,
instead of the low of day. So that's that's my approach, and I really wanted to set my stop really tight. So but generally, setting the stop at low of day would have a higher win rate, I believe. Definitely, and but this one didn't work out, and actually not looking that good on the daily too. But I'm just like trying to play the bounce because it's like oversold to the 50 EMA on the daily, also near the previous swing highs, and then maybe I think I can catch a bounce maybe to the declining 21 or even a V-shaped recovery, because the market really love the going up without a long base or a long consolidation. Sometimes the stock just rally into the EMAs, breaks out, and they just keep going and then riding the 9 or 21 EMA and going up the whole way. Like I think ILEN or like CIEN, like those stocks, it really doesn't give you a tight range or a really long consolidation area. And sometimes I just think maybe I could try those breakouts. So this one is a fine trade in my opinion. So not a very good one, but still a fine trade. And just wanted to show how I bought the intraday pullback.
Mm-hmm.
This is one of the example. And so for Circle, this one is also a pullback buy, which failed too. Then I wanted to buy the pullback into the 9 EMA, also the previous highs. So during when the candle is not closing that weak, like the intradays is, the 9 EMA is around this area. So it looks better in the intraday. So I try to find to catch a bounce into the 9 EMA in the daily, but it fails. So this is another losing trade that didn't work quite well, and I think majority of the reason because the circle is like really have a strong downtrend. So the 21 is really trending down, and the 50, although it's not shown here, but still is really trending down.
Right.
And sometimes just buying purely into the 9 EMA or it's definitely not above the anchor VWAP, I believe. So it's like rejecting the anchor VWAP from here. So that's why I'm not buying it right at the open. Like some people will like buying opening range highs here, but sometimes it's gapping up into the resistance area, and then I'm just going to skip the breakouts, the opening range breakouts, and maybe wait for the pullbacks into the support, and then maybe a potential rebound. But this time it just doesn't work, and I think this is also a little bit I'm buying at the wrong time. Like it's only the circle is really weak, and it doesn't show a decent higher lows within this space. It doesn't have a higher low, so just purely buying on the pullbacks here, I don't think this is a really good one, in my opinion.
Yeah, but you kept. I mean, it's a small loss at the end of the day. So
yeah,
and a quick loss.
But sometimes like small loss like added up.
Yeah.
So if you're taking 1, 2, 3, 4, 5, then you start getting maybe and sometimes like intraday, there could be like several entries too. So the first 5-minute breakout didn't work. Then it could be the 15-minute breakout, maybe later today, or just right after stopping you out, and it trying to reverse. So sometimes you have multiple stops in a row if you're buying the pullback at the wrong time or at the wrong place. So this is where I'm still like learning and trying to really find the best spot. And currently, I think the good one would be the first pullback within the base. The base with some higher lows. maybe here, but this one doesn't have a really good pullback opportunity, and it just fades. And so you can see when the price starts losing the anchor VWAP, then it starts losing the EMA, and it starts another downtrend. So if you are buying this pullback, I don't think so, because this, but maybe because it also coincides with the previous highs. But if you're buying this pullback here and then it doesn't work, then you can know that this stock you definitely bought it at the wrong time. Either it needs more time, or either it just goes down straight away like that. Mm-hmm. So this is I think I really love how clear the pullback entries are. So if it doesn't work, it just normally just really fades away, rather than just chopping around near the resistance area or a support area. Yes. And this one is the Rocket Lab. I personally think this one is really, it's a really bad one, because I bought it at the breakout of the previous high here. And then I think, okay, the 9 is still above the 21. And then it is a pretty strong, oh, this one is a short. Oh, this one is a short. I think I shorted, so this one is a short. And I take the short as the rally into the declining 9. But so luckily I thought I was in a long, but still it's a loss. It's a losing trade. I take the short mainly because I believe it was the anchor VWAP from this bar or this one here. Maybe I think this one. Yeah, I think this one. And also the it just have huge resistance from the past few candles, the red candles. And I just put the shorts, like I just shorted it at the 5-minute candle, I believe. So I believe I shorted it at this candle right here, and it just break down of the previous 5-minute bar. And I think I didn't catch this one, and then I switched to this one. So I set the stop at the height of day, and then it's like a reversal entry, like a pullback short. It's the flip side of a pullback long. But this one stops me out like a few days later. And then so sometimes I think this one also, like I have talked before, is above the 50-day. So I'm just shorting it based on the declining 9 and also the flattened 21. And also definitely some distribution over here. But actually I think the weekly looks not that bad.
That's what I was going to say. What does it look like on a weekly? Yeah. Still above the 9 EMA.
Yeah, still above the 9 EMA. And even if it works, it doesn't have the risk reward is not that huge. If it's pulling back into the 50, you're probably gonna find supports at the 50 and the 9 weekly EMA too. So like maybe only 5 hours for this trade, even if it works really well. But eventually it stops me out at like 2 days later. And then I trying to evaluate from this trade, and then I find out, so sometimes I shouldn't just purely short a pullback into a declining 9 or 21, especially when the weekly is looking good, when it's look above the 52. That's the main message that I took away from this trade. Yeah, the weekly looks pretty good here, like because it pulls back pretty gentle. It's not a really sharp pullback. It's not a really huge distribution candle. So yeah, this is a lesson learned from this trade. So the next one is SoFi. Yeah, this one is more so it's a December trade. And then you can see how, I don't know why that I'm buying this candle here. Let's zoom in on the hourly. So it's another pullback into the hourly EMAs. So I'm just buying the pullback into the hourly 21 and just purely hourly 21. It's not even near the daily 9 EMA. So it's I would say it's pretty extended on the daily. And I remember part of the reason that I bought this one is I didn't quite catch the bounce from this low here. So I'm a little bit like eager to get into some positions and to really have some exposure on the market. So, and then I try to be aggressive on my entry, and then it just doesn't work because it's really extended on the daily. At least I wanted to pull back to at least maybe 29 EMA level, at least. And yeah, maybe this one would be a good pullback, but but just didn't take it, and then it gaps down. Yeah, but I think this entry is really bad. I just sometimes just being too aggressive on the intraday, especially. Sometimes you find this. I look at this candle also. I did cut the hourly 21, and it closes pretty strong. That's could it be a reversal right at this area? And then, but that is only an inch hourly chart. Is on the daily, the structure is still a little bit is too loose, wide and loose, and it's above a little bit extended from the EMAs. So this one is pretty bad. It's pretty bad trade. I believe. So another one is OKLO. OKLO. For this one, I instead of short, I take this as a long trade. So I see the first huge green candle, which closed above the 50, and then I thought it would be a character change. I thought on this consolidation here that it could find support on the rising 9 and the flattened 21, then it could start another leg up. And on the hourly chart, but I think on the intraday entry, it really looks pretty. Let's see. I think only 5 minutes. Oh, so yeah, I think on the 5 minute, I bought the 5 minute breakout, and then I put the stop at. I think on this bar low here, I didn't put it at the low of day because the stop is too wide. In my, I believe, is more than 2%, and then I trying to like reduce it, like to really tighten it to the low of this candle here, because if I find support on this candle, then I really love setting the stop at the low of the candle. Then so I'm just trying to put it right here, but it didn't work. So this one is another trader. I think is fine, but looking back, this one is I think it's a fair trade. Definitely, it's on the 50 is below the 50. The 50 is trending down a little bit, but I believe if OKLO is really finding support at those levels, I think it's a pullback into the also a 21 EMA too, and I think if OKLO is really finding supports here, then it could potentially start another uptrend. But this time it doesn't, so it just fails, and then it stops me out, and then it just going down and have some follow through to the downside. So this one is OKLO, and I believe in December also, the market gets a little bit choppy, and there are less follow through to both the long and the short side, and that's the that's the part that I would like to. They didn't catch this at the very beginning of the losing streak in the very beginning of December. So yeah, this is the OKLO losing trade. So this one is open. This one I traded. I think this is a really bad one. I bought it at the resistance here. It should be a short because it's rallying into the declining EMAs, and the EMAs are really tight. and they are very close to each other. So the 21 and 9 are declining, and the 50 is flattening. So it should be a short. But although if I took the shorts here, I'm probably gonna get stopped out here. So that's why in December I just keep getting stopped out.
Chop is tough both ways. Yeah.
Yeah, there's a huge like the wicks, and then your thing is going to the upside, but no, it just follow to the downside, and then but sometimes your thing is going to the downside, like maybe this candle here, and then it's going to come back maybe 1 or 2 or 3 days right after that. It doesn't get that much follow through, and you're probably going to get stopped out on this candle here. So that's the really hard part for December, and yeah, but this one I just very disappointed. I don't know why I'm just taking. I think I took this breakouts. I think the EMA looks very tight, and then it looks like it's going to break out from the previous this tiny little like the high of these candles and also the 50 EMA on the daily. Then let's try buying this breakout. But actually on the daily it is only declining EMAs. The EMAs are really declining and it's rallying into the EMAs. So especially given the fact that the previous day candle was very weak, it closes below all the EMAs, and that is not a good sign. If it closes above the 50 or even above the 9 EMA, then it probably looks much better. But this close is really weak, so I think this trade is really bad. And then I just think that I just get some like behavioral slippage there, and this is the trade that I think I should be avoided. It should be avoided, and I hope I could reduce these kind of trades in the coming year. So this one, Nvidia. So I traded this Nvidia leverage ETFs. So maybe look for so it's this day here for Nvidia, and then I think the market is really weak after this sell off here, but didn't like this one I didn't really wait it. The normally if I'm trading the pullbacks, I really wanted to like trade the pullback into the declining EMAs, but this time I just feel that I should have. I think it's a very similar one to the SoFi trade. So I really want to get into some short positions. So I'm really eager and trying to be aggressive in my entries. And then I'm just trying to short the Nvidia on this like pullback into the hourly 9 EMA. And then it just stops me out later today. And I think I took it like twice or third times because it's like chopping around intraday too. So I keep getting like chopped on the intraday. And given that the daily is actually not that valid too. So these kind of like I think this kind of trades should have been prevented. And like at the first glance, that is not even pulling back to the 9 EMA. And so this is the Nvidia trade that doesn't work that well, and that got stopped out intraday. Although the second day it gaps lower and have a huge follow through, but only one day. So I remember on this day here on the Wednesday, and also like in the majority of the December, I just suffer from being stopped out. And maybe the next day or the next day, the stock's starting to move in my original direction. So I'm not trying to short Nvidia here. I got stopped out, and the next day it starts to move down.
Yeah.
So I'm feeling like, am I doing I think I'm doing the right thing, but I'm just getting stopped out. So I should keep trying instead of just like I've sit out or just avoid like reduce the trade frequency, and then. Because the market just keeps like maybe giving me some false signals or like really have very short follow through, and then I keep thinking, should I still? I think I should keep trying until I get I really get the one that's working. But no, like in December, just work 1 or 2 days and then it just snaps back up, reverses to the and hit your stop. So this is really hard in December for me. And yeah, and this NVIDIA trade is one of the, I think, the one that I shouldn't have taken. So the QBTS, I think for this one, I shorted it at the 50 EMA, near the 50, the pullback into the 50 EMA. Also, the EMAs are really close to each other. So I shorted the 5-minute breakdown. So I didn't catch this 5-minute breakdown because it's too fast, and I think the stop is too wide for if I'm going to short this breakdown here. This is all more than 3%. And then I just keep wait, and I think also I decided to short take the 5-minute breakdown on this candle here, and also like closest below the 5-minute 9 EMA. So I think it could be okay, and it has some follow through on the same day. But I didn't take partials because it's really like rallying into the low of day, into the end of day, and then I didn't take partials, and then and then I just got stopped out. I think 1 or 2 days later, and so this is really frustrating. Like, it's just give me some like, oh, I think this time it has to be this. It has to be working, but turns out it just reverses back, and yeah, I really hate the short follow through. It has some follow through, but just very little, and just one very short one.
Right.
And yeah, this is the choppy market. Like it just chops you around and gives you some false signals. Yeah. So this is one of the losing trades, the very typical one. And this is the CSIQ. Yeah, I take the long trade too. So when the short's not working, it starts rallying back to the upside, and then I start taking a long trades, and then I bought the breakdowns on CSIQ. So and then I also got stopped out at 1 day later. So it closes pretty strong on this day, but it just comes right back at the EMAs just 1 day after. And then I get stopped out again. So I keep doing the longs and the shorts and the longs and the shorts, just flipping between them, and then very few of them really works. And yeah, that's pretty summarized my December. Yeah.
Yeah, I think I was stopped on either NXT or FSLR on that same day, probably that same day you were. The solar names weren't working or didn't follow through. Looking back on your year, what was kind of your biggest loss? Was it a one particular trade, or more? It seems like in December it was just an aggregate, like you said, of all the losses together that led to that drawdown. But was there kind of one loss that stood out last year that you remember and kind of have a key lesson, key lesson that's associated with it?
Yeah, I think December there aren't any like significant losses. Like most of them are really like death by thousand cuts, right. And also the original, like the gift back in the profits, like the profits in the existing longs that I've taken in November. So they all add together, like my longs are the profits that my longs are pulling back,
right.
And then that's the drawdown. That's the first drawdown. And then I started, okay, should I start doing some shorts? Then this is the second drawdown. And then that's the flip between the longs and the shorts, and it's just further increase the drawdown. Yeah. So that's probably how the December drawdown came. But speaking to, I think the largest loss in last year would be, I think I shared this surf like earlier in 2025, this gap down. So this is a really like a 35% gap down or 30% gap down. So yeah, this one is the largest loss. I shared this in the previous interview. So you can go back to the previous interview and take a look. Yeah, I included it. This is the largest loss, I believe. And after that, it doesn't have fortunately, I didn't catch quite. I don't think so. Maybe HIMS, maybe? I think this one too. Yes, I think this one too. I think I did catch this huge gap. So it's around, I think I bought it right around here, or maybe at this breakout or this pullback. So you can, for anchor VWAP, you can see this pullback here. I think either I bought this breakout or this pullback, but it just gaps down for almost 30%. So I think this is the second largest loss. The huge gap downs. Yeah. So let's move on to the.
Let's move on to the positives. But like you said, that's
positives.
There's a lot of lessons there, and that's where the improvements will come. Looking at the losses, so
yeah, agree. I think the winners should be much straightforward, and most of my winners are doing, like, my entries or my exits are doing better. So you can sometimes observe that my winners are really, like, the entry is really good, like, they really with optimal one, and I'm buying at the right time, and I'm not like doing some random, like, buying it over here or just buying it randomly, maybe over here. So if you're buying it right at the right time, that mostly would be like most of the big winners really comes from buying at the right time, not the very random ones. So this is why it is important to study your past trades, so you can find some patterns or the takeaways between your trades, among your trades. So this one is BBI very early in February. So I bought this gap up. So it's kind of like a breakout. And then this stop is pretty wide because I think earlier in 2025 I didn't really wanted to very, very tighten my stop. But this one I just took the breakout. I'm not sure whether I can see the intraday chart here. But I think this one, my entry was not that optimal, but on the intraday, I believe. But on the daily, I really like this base, like it keeps building higher lows, and this strong reclaim. I honestly prefer it to have more consolidation near the EMAs, maybe 1 or 2 days more, and then a gap up. Yeah, to tighten a little bit more. And yeah, this one, I just took it at the gap up, and then it didn't work. So I sell some into strength on here. I think many people ask some question about selling my sell rules. I actually don't have a very strict sell rule. I would sell partial into strength in when it's up 3R or 5R. But sometimes if the market is really strong, and I sometimes would not take partials if I think it is the market is really strong and I have huge cushions on other positions. And yeah, I sometimes would just hold the whole positions, like trail the whole position along the upside. Mm-hmm. But generally, I would sell into strength when I think it's really extended on the lower time frame, especially the 1 hour, maybe. Yeah, especially 1 hour hourly. So I think I sell it maybe on this candle or this candle here, and I think it was pretty extended if you just try to see from here, especially given the fact that it has been going straight. I think you say 30% or 50%, like a 50% day up day, yep. And then it has a 1 day consolidation and it keeps going again. And then I think it should be a time to take some profits, and then I just take around like 15%. And I normally would trim my position at around 15% each. So every time I think this stock is extended, I sell 15%. Mm-hmm. So and then I closed this trade on the first close below the 9 EMA. Yes, this is how I handle the trade. So, but yeah.
For the entry, what?
So another.
Sorry, sorry, Martin. For the entry, I know you said it maybe wasn't the best entry on the intraday. Was it through opening range high? How are you kind of buying that gap up during the day?
Yes, I believe it's the opening range high. So I think it's pretty like on the first 1 or 2 minutes, because it's really going so fast on the first or 1 to 2 minutes. I believe it's not available. So yeah, I'm buying it at the first 5-minute candle. So I believe it will be the 1 minute opening range high breakout, and especially given that it is a lower price stocks, so I think it has a higher slippage and is moving way faster. So
yeah, I want to,
but
taking just a step back here, Martin. Obviously, we're focusing on the individual trades and your execution, but I do want to kind of bring it back to themes and kind of how you selected these names. Obviously, looking at the list, people can see high ADR names that when they're moving, they can really go. But talk to me about like how you discover these a little bit, and how you kind of look for themes in real time and know what area of the market to focus on and look for these entries.
Yes, I think for themes that I am going to like, I have several watch lists, so I'm going through all the watch lists, all the tickers like one by one, and then I also do scans. So if I'm doing like the pre-market scans for the gap ups, also the potent scans, that those scans are available on the previous interviews that I did with Richard last year. So if you can go back to check the scans, and I've shared them in that interview too. So for potent scan, it's like scanning the previous day, the largest gainers in the previous day. So from the screeners, if I'm seeing multiple of the stocks that is within the same industry. So for example, maybe yesterday, but yesterday was a down day, but still there are like, for example, these mining company, like the metals names are really strong. Like there are lots of metal names that are going up. Then I would develop a sense that, okay, so metals could be another, like, but metals is an existing leading theme, so it's not a potential one. But when there's one theme that is not the existing leader, but keep popping up or pops up within the same day, there are lots of the names that pops up within the same day, then it would really catch my attention. So as for the watch list, so sometimes when I scan through, scroll through my watch list, I would like to upgrade them or like downgrading them. So if there are several stocks that I like upgrade from like this mediocre watch list to the leading watch list, then I would like also like have a have an alert in my mind that, oh, so there's this theme is showing some strength yesterday, then it could set up in the next few days or weeks. So I really need to like get some attention to them. So that's probably how I spot the theme, mostly from the scanner and also from how I like managing my watch lists. Mm-hmm. But speaking to the individual trades, for example, this BBAI, apart from the themes, I believe AI theme is still a hot theme in the earlier parts of 2025. But other than that, like BBAI is, I think it catches my attention on this day here. Like it breaks out from this tiny little range, because normally like it's surfing below the like 21 and 9, so it acts pretty weakly on these 3 days. But on Thursday, it gaps up and closes pretty strong and closes the gap, the unfilled gap on the Friday here. So on this day, so it's really showing strength. So it's closing strong, It's building higher lows, so because it's not fading. It's not fading into the 50 EMA. Because normally, if the stock is weak and it's keep rejecting the EMAs, it's probably going to the downside. But it isn't. So right after this day, and then this one would be one of the main idea that I'm going to track in the coming days or weeks. So after on this Monday here, this green bar, so it opens pretty weakly, and also filling the gap on the first day gap up, and it found support, so it rallying back and closes really strong above all the EMAs. And then I think this could be another higher low. So I'm thinking potentially it could tighten up a bit here, 1 or 2 days or a few days more for a better breakout. But sometimes it just goes straight away, especially in the past 2 or 3 years, the stocks doesn't want to base that orderly, get that really tight candles before a breakout. So this one just breaks out right after this Monday reversal. So I think these two, they really it catches my attention of BBAI and what brings me to entering the trade here.
Yeah, Martin, that's really well explained. And just to kind of say it one more time, because I think there's a really important point to look at the themes you're scanning every day, reviewing your watch list every day, looking for names together acting abnormally strong or abnormally weak as well, I'm sure. And then on an individual name basis, you're tracking those higher lows, the signs of strength, and then just trying to pick your spots as they complete your setups. I think you summed it up really nicely, all in one in that one clip. So if you missed that, definitely go back and watch it. That would be a point to really take notes on. Perfect. Let's dive deeper into your triple Qs trade, unless you had more to add on BBAI.
Yeah. So this is a triple Qs. I traded it. Oops. Let's see. Yes. This is a Parabolic long that I traded at the April's low. So I think this is the best trade. I think this is really the best trade that I took in 2025, because I think this is the first Parabolic long that I've traded, and I think I traded it pretty well. And because from this huge gap downs, from this for the 1, 2, and the 3 gap down days, and then I really think the market is really panicking. It's really into a panic sell mode, and I really think the bottom is near, and I keep waiting for the second after, I think before the market opened on the second down day here, I'm feeling I just want another gap down. So I'm just going to get the Parabolic longs. If there's another gap down, just give me another gap down, and then luckily the market gives another gap down on the next Monday here, and then I spotted it, so it's really extended to the downside right after the market opens. So it's 20% below the 1 hour EMA. It is absolutely it is very abnormal, and it is really stretched and oversold. And I really think the timing has come, and then I think this is the time to take a shot and buy at the reversal, probably 1 minute opening range highs or the intraday breakouts. And because this is really the first time that I took the Parabolic long, so I really didn't expect that. I think apart from the entry, I closes the trade pretty well too. I just closes right above the hourly 9 EMA and also near the previous day high. And I didn't I think I can zoom in for a bit. Let's see. So yeah, for this triple Q trade, I bought it at the 1 minute, but I think it didn't work. That the 1 minute chart isn't available. Then yeah, it's a 1 minute breakout, and then I put the stop at the low of the breakout bar. So it's around 2% stop. And so this one really, I think, I merged the a bigger picture on the daily into the really short time frame on the intraday really well. So on the weekly and also the daily is really extended to the downside. If you can see this chart, it's really extended from it's 50% below the 9 EMA. This is very, very rarely that it really happens from an index. It's even happening on an index on the Qs. This is TQQQ, so it's around, I think, around 15% on the Qs. So on the Qs, it's down 15% from the daily 9 EMA, and this is, I think, this is really extended, and we want to take the parabolic longs, and so I zoomed in on the daily, on the intraday chart, and I bought the 1 minute breakout. So I just hold through the trade, keep holding through the trade, and then I remembered I wanted to my profit target that I'm trying to that I set before I entered the trade would be the hourly 9 EMA. I believe that for the Qs, it's also near the 5 minute, around 150 EMA here, and I also on the hourly chart too. So it's really near the hourly 1 hour 9 EMA, also the 21 EMA too. But I believe that because it's really strong on this 5 minute candle here. So it's I think on 1 minute it's just going up for 3 or 4% in just 2 or 3 minutes. So I didn't sell it right at the hourly 9, and then I just keep waiting for the first kind of a weakness here, but then I eventually sell it at the very close to the 5 minute 150 EMA, I think right here. Mm-hmm. So I've really sell it near the resistance, and then I sell all into the strength, because I think this is a really quick move, and the volatility is really huge during those times, the period back in April. So I really want to lock the profits in, and then this is a really quick, a 13 hour in just half an hour. So it's a really good one, and then I really plan this beforehand. I just think this would be a very good idea after the first or even the second huge red candle, and then I think I planned this trade really early, and then I follow my plan, and then I really take the trade, and then I exited the trade pretty according to the plan, and on a pretty good level. I'm not giving back a lot of profits. So this one is I think I did it really well, and also merging the bigger picture with the intraday time frame too. So this one is the TQQQ, the parabolic longs. Yeah, these opportunities I think is very rare. Maybe once in a decade, maybe. I'm not sure whether we will get those thousands pullback and a very, very quick sell-off in just a few days. And yeah. But when it works, they are really working well. And I look back at it, and I think this is a little bit like my GME trades in reverse. So if you just split, can I flip? Yeah, we flip it upside down. Then it's my entry for GME 4 or 5 years ago would be here. Yeah. But after learning and keep improving, then a trader that would buy at the parabolic top could also short, because you can really improve. It's not really the trading can actually improve by constantly learning and finding your own mistakes and trying to prevent them from doing over doing over again. And so I think this one also like adds a little bit like the value, like for the parabolic move from buying at the parabolic top to like buying at a parabolic bottom.
Right.
So it's really brings
full circle
an extra value to me. Yeah. So another one would be FUTU. So right after this the April correction, then FUTU is one of the leader. And then I just bought the breakouts for this one. I bought the breakouts on this small little base. And it's also, I believe, above the anchor VWAP. So although this one didn't touch the anchor VWAP, but it's above the anchor VWAP, and it is above the EMAs, and EMA starts trending up. And then I really love how the price action of these 2 days, it found support on the 21 EMA and closes above the 9. So it closes really strong. So I think these 2 days would be the day that really catch my attention. Then I bought it at this breakout. Pretty standard breakout, I believe.
Did you incorporate the anchored VWAP at all with this trade from highs?
I don't. I think I put it here, but I didn't. Yeah, I think I have this one here, but I don't think this one really influenced my decision a lot because I'm not trading at near this level. So, yeah, but the angle of VWAP would be also a tool like for you to identify whether the stock is basing is above the potential support area. So if FUTU is pulling back into this angle VWAP, as it also near the 50 EMA too. So if FUTU is pulling back into the 50 EMA, I would also consider buying the pullbacks there. That's so I really like. I think I put the angle VWAP also here when I'm trading this breakout, but this time it doesn't pull back that much. So I traded the breakouts. So yeah, yes. So this is FUTU.
Yeah.
Oh, for the seller, for the sell, this is the one that I don't think I'm doing well because I sell all in the strengths, and then I sell some in the strengths here, and then I close my position at this like reversal, and it's in high volume. I think it could be a short-term top maybe. Then I just sell it when it start reversing intraday. But if I'm just following my sell rules and then I trail it with the 9 EMA, keep trailing the 9 EMA, I could actually get another 50% move. So this is the I think I also shared this in the SMCI trade last year. So at this one I didn't improve that well too. I think but for the selling part, I will not be that strict to myself. It's like because I prefer controlling my like downside rather than like maximizing my upside. Because I think my weakness is more on the downside, it's like overtrading and then some buying some really extended areas and some random levels. So I think controlling my drawdown is more important. But definitely, I think I wanted to like improve my my selling rules too. Like my selling, I should like really trail more and hold my winners longer. Yeah, this will be one of my goals too.
Yeah, it was also such a sharp correction, and that the trend potential for this one was super strong.
Oh yeah, that's true. So it's after a
bigger base,
sharp correction in the bigger base, which is more favorable to like precision trading for holding your winners for a longer time. Yeah, I agree. Yeah,
but it's on hindsight. So yeah, it's It's the
Yeah, yeah.
trader quandary there. Yeah.
Yep. So this one is OKLO. OKLO, I bought this one on on the breakouts below the 50 EMA. And this one, on hindsight, I think the setup, the technical wise, is not really good on this breakout, because it can really easily rally into the 50, and then it would just reverse it right back. But this one just doesn't stop me out very luckily 3 days later after it. And actually, this one could be a better entry for a pullback, actually. So it pulls back into the 150. Actually, there's a very great line, a great EMA, which is the 150 and also the 21 EMA. And the 9 is above the 21, and they're both sloping up. So I think this one here would be a better entry in hindsight. And actually, I think I would still like trade this one if I'm not trading the breakouts here. But fortunately, this one just works. And I bought OKLO. One of the reason is this reversal pin bar here. So I really think it would have some like really follow through to the downside. I thought it would be more much weaker, and then gets rejected from the 9 and 21, because normally it would be like a short entry actually. So if you're shorting at the 9 or at the claim 9 or 21, and also the EMAs are start stopping down and they're really close to each other, and it could be a short, but instead it doesn't go down and just reverses right back and closes above the 9, and then the second day it gaps up. So I think it could be a change of character, a strong sign, and then I just like take a short. But definitely, I think in hindsight, because it's like below the 50 EMA, and then I think it could. I think it's a fair trade, like not a bad one, but a really good one. The better one would be the pullback here, or even here, like when the 9 and the 50 are really close to each other. And I'm not sure about the angle of VWAP. Let's put it a little bit. Yeah, angle of VWAP is here is below the angle of VWAP. So yeah, I think this one is fine. It's fine, but luckily it works pretty well. So I think mostly because the market is trending up, it's really reversing after have a V-shaped recovery after the April sell-off. So, and then I sell some into strength here, and then I sell more into strength here, and then I close my whole position at the first close below the 9 EMA. Yep. And so the next one is FUTU. This one is a breakout. This is a very standard inside day breakout. So little bit like VCP. So it's like have several like pulls back, and it forms a pretty tight candle. A handle, like a cup of handle this is a pretty tight range here. So it's serving the 9 EMA pretty good. And then bought it inside the breakouts. So this is pretty standard one. And sell some into strength here. And then I just closed the trade. I didn't wait for the close, because like gradually I think I'm not watching the close that often after the April sell-off, because in April the volatility is really high, and I really like stay till at the market close. But gradually, I think this is a really healthy lifestyle. Then if I'm staying till the market close, it would be like 4 or 5 a.m. in Hong Kong time.
That's tough.
So, yep. So now my approach would be like setting a stop a little bit lower than the 9 EMA. So if I am trading this one FUTU, and I would be setting my stop a hard stop at this candle low. So it's under the 9 EMA, and I give a little bit of room for like it undercuts, and then if it finds support and reclaim, then I am going to like set it a little bit below the 9 EMA, because I can't watch it close.
Yep.
But for this one, I think I just took it too very aggressively. I don't think. I think it just like break down from the previous 2 days low, and then I think maybe the market is extended too. Like the market is rallying in like 3 months in a row. Like I mean 3 green months, and it keeps serving the EMAs without a deep pullback, and then at July, and then I think maybe it's a bit extended, and then I should sell my winners more aggressively. So I think that's why I take this one earlier, and this time it works well. Like I was selling early puts me in favor, but this, I think if I'm trading it again, and I'm just going to set my stop at this candle low, and then I'm going to get stopped out at the same bar but at a lower price here.
Right.
Yeah.
Right. And
maybe I don't know. Maybe I will have some like my own view or own opinions on the market, and I may just like sometimes I would still like take the profits early if I'm feeling like a little bit skeptical about on the market. Yeah. So on the sell side, I'm more arbitrary. Is it called arbitrary?
yeah,
flexible.
yeah, flexible, yeah, creative, yeah, makes sense.
Yeah.
And you already mentioned this, but your first sell into strength, is it usually 15 to 20% of your position? Is that kind of typical?
Yep.
Gotcha.
Correct. Sometimes for the first, maybe like the when I'm starting from cash and then starting to have some new positions that have a progressive exposure to the first few positions, then I may sell more into strengths because I'm not sure whether the market is working well or not. So I will be more like conservative at the beginning. But if I really think the market is really on the uptrend and the thing is really heating up, working well, then I will start selling maybe less, or maybe even like not selling the strength, like just trail the whole position with the EMAs and with the stop. So yeah, that's my approach. So this is the SMR trade. I took it at this breakout. I think a breakout of the previous day high. But I think looking backwards, probably the best one would be the pullbacks into the 21, and also maybe the previous bar high around this area. Also, I think the hourly charts looks better. Yeah, the hourly chart, it just pulls back into the 21 and 50 when it starts crossing, when the 21 starts crossing up the 50. And I believe this entry, I think I could get a better entry for buying the pullback. But maybe I missed it. Maybe I just I think I probably missed it, or just not aware of it. And then I bought the breakouts up to the pullback. And this one still works well. And I did set the stop not at the low of day, probably at the breakout candle. Let me see. Can I? I think it's not working again. Oh no. Okay. I believe I'm buying it at this candle. I think the opening range highs breakout. And then I set the stop right here. I'm not sure whether it's this 1 minute candle, like 1 minute breakout candle, the 1 minute swing low, or I believe could be I'm setting a stop at the opening price. So sometimes I'm just setting a stop at the opening price, because when I think the price like gets it gets sell off after the opening, and then after market open, and then it rallies back. And sometimes I would just put the stop back at the opening, at the open. So if the stock is really like going, but I think this is a really like aggressive one, especially given the 2025, the first 30 minutes after the market open is really choppy. I think the better one would be the low of this 5-minute candle. But this one works, so but I still think the better one would be the low of this 5-minute candle. And so still, I think we can find some lessons even on the winning trades too. So this one would be, I think I could do it better. Let's see, what's the stop? Oh, so it's 2%. So it's probably because I think the stop is too extended from the low of this candle here, because I'm buying it at the opening range highs. So, but I think So and then I think, so let's tighten the stop and then to the open. Then it goes. I think it's only it's still 2%. So and fortunately this one works. But I think the better entry, the really better entry would be the pullback here. Would be the 1-minute reversal, probably. Yep. So this one is the Planet Lab, and then I bought the EP, but it's like a pullback on an EP. So like in 2025, there are a lot of these fade right at the open, and then it's not like it's really a fake out in the opening range highs. So it breaks out, but it fades back, and then I bought the 5-minute candle breakout, set the stop at the 5-minute candle low, the breakout candle low, and this one works pretty well. So it's around 2.3%, less than 2.5% stop, and this I am really satisfied with this entry and the stop setting. So this one works really well. But for the sell part, like the exit part, and I just closed all of them into strength, and it went up. It filled up another 30%. So if I'm following the 9 EMA, trailing with the 9 EMA, I'm probably gonna get stopped out on this day, because I'm probably setting my stop order on this candle low. So I'm gonna probably get stopped out on this day here, or maybe here on this swing low if maybe on this swing low, maybe. So it's another 10% gain if I am like I'm not selling all of them here, but again, like I think it's good to like sell some in the stream and at least like catch maybe a decent part of this uptrend. So I'm still pretty satisfied with that.
For this one, Martin, do you mind going back to the intraday chart and using this entry as kind of an example for how you would position size? So of course you know your entry through the 5-minute candle. How do you decide in the moment, how much size I'm gonna use for that entry?
It's actually right after this candle has formed, and I would try to like measure what's the range of this candle. So if I'm buying this breakout, so what's the range between this breakout and the low of day? So and say, it's 3%, it's a little bit wide, and then I'm going to like measure it with the low of that candle. So I will like calculate the potential the stop, how wide it would be my stop, and like for example, this would be like it's around 2.5%. So if I'm risking, like if I have a $10,000 account and I'm risking like 50.5% of my account, it will be $50. So I'm just going to like divide like 50 into my stop. So it would be around 2.5%. So it will be like 50 divided by 0.025. So it will be like a $2,000 position. So it will be around like a 20% position size. Yeah, 20%. Yep, it will be around 20%. Yeah.
Nice.
So this is how I calculate. And and when you're like doing it really often, you will know if a 2% stock will be a like 25% of your portfolio. Like you will have a really quick math, and normally your position size it won't change drastically. Like if you are trading like 10% of your account or 30% of your account in 2 consecutive trades. That's very rare. So yeah, it should be really like similar, around maybe 20 to 25 or 30%. Yeah.
Throughout the year, did you increase your position sizes as your account grew, or did you kind of keep it with the original?
Yes.
So you increased it as it grew. Yeah. So you kept it percentages.
Yeah, I increased that.
Gotcha.
Yes. Yep.
Yeah.
Correct.
Because some traders, they'll start with 100K. If they're up 50%, they're still using the position sizes from that original 100K. So yeah, I understand what you mean. Yep.
Yeah, I think this one is I really learned this mindset from Christian, from his streams. So I think Christian has shared that I think a lot of traders didn't like trade big, like really becomes really successful because they didn't size up. They didn't think in percentage, or they just think in the absolute dollar amount. So I just learned this lesson or learned this knowledge really early in my career. So then I'm just following this rule. I'm just thinking all of the like the gains and the losses in percentage terms or in the risk terms. So yeah, it just follows all my journey.
Makes sense.
So this one would be the IONQ trade. This one is really good. I catch this really strong uptrend at the beginning of the move. So I really want to point out this quantum setup on the weekly chart, because on the daily it looks a little bit messy. Like this was chopping around, undercut the 50, pulling back to the 150. But on the weekly, it's actually looking much more cleaner and better, especially on this huge pin bar, also the inside wick. So these two, like the pin bar in the inside wick, just like yelling at me, like this one is really setting up. It could be another leader. It could be the really good VCP, also the cup with handle. So on the weekly, really stands out from me. And then I'm just have a really close attention to the quantum's name. And then I think I tried several times. I think on this day or this day here, and I got stopped out. But I keep like tracking it, and it didn't follow the 50. And on the weekly, it still looks amazing. It's still above the 20 to 21. Although it's I think it's below the 9 at the moment, but it's really like really tight. It's really consolidating above the 50 EMA. Then I tried again. I got stopped out, and then I tried again on this day here, and this day works. So you can see one good trade like could give you more than like 20 hours or even 30 hours, so you can compensate for your previous losing trades for like 30 times. So if you're getting like if you're talking really like in extreme case, you're getting stopped out for like 30 times before you're getting into this trade, you can still be break even if you're writing it up. So I think that's the advantage of the setting a tight stop that really indicates, like it really shows from this trade here.
Your last go ahead and show what you wanted to show. Yeah, go ahead.
So I think on the intraday, I just bought it at I believe on the 5-minute candle breakouts. Let's see. Probably I think the 5-minute candle breakout or the opening range highs. I just waited for them to, or maybe I'm a little bit late or hesitated for this previous bar breakout, but I'm just press the button after it breaks out from the opening range highs or the first 5-minute candle high. So this one worked pretty well. And then which was your question?
Your last sell on the daily, you had those two tight bars. What made you kind of sell to strength that last 5% position?
Oh no, this is the last sell. So this
gotcha,
is the second last one.
My bad.
Yeah. So this is I sell it into strength more, and then I sell the remaining 80% into weakness.
My bad.
And this sell is also like, I think it could be extended, and because it's on September. Like September is also where the market is extended. And there's also some names that are showing some weakness. And then I'm being skeptical again. And then I just sell them and like early. And locked in a decent profit. And and then this one is fine. But like I think if I'm like trading it again, and I'm going to set my stop at this candle low, so it will be a little bit lower than my original like exits here. But maybe I don't know. So sometimes I'm just going to be skeptical and like take my winners early. But I think given the fact that it has been a really strong move up, I think this is like 80% ish. So I think it's fine for that. So this is IONQ, and also RGTI is very similar. The same day, the same sector, the same weekly too. Like the weekly is also looking really here is actually looking better than IONQ actually. So it's above the 9 EMA. Also the inside week, and it's really flagging nicely here. So the same sector, the same day, and then the same setup. So bought the breakout again, and then I think really like trim the position also pretty aggressively and sell them all into this day here, so into strength. But this one RGTI, I also bought this breakout right after it formed a small flag, like very tiny flag, consolidation above the 9 EMA. So it touches the 9 EMA twice, and then it starts gapping up. And I think I bought the opening range highs on this bar here. So it is a bit aggressive, but I think if this opening range high doesn't work, then I'm probably going to buy it maybe on the pullback. Maybe not on the pullback, but maybe just wait for another day for consolidation. So a little bit like an anticipated wick play from Oliver Kell. So it opens up at the wick of the previous bar, but instead of buying it at the breakouts of previous wick, I'm just buying it at the opening range breakouts. Then this one is just works very fortunately, and then also sell them into strength. Just I think it's really extended, and I think IONQ is I think maybe I just think it's really extended, and then just sell them into strength. QBTS is really similar, but QBTS, this one, I think, this one is actually 1 day before the real breakout day. So I believe this QBTS is the earlier tell sign, earlier sign that let me see whether this one is a this one I traded the 5-minute reversal from the low here, and I think I believe I bought this one, although it looks really bad on the daily, but sometimes I just doing this kind of like random trades. If this one fails, it will be one of the random trades in the losing trades in another list. But I believe I bought this one mainly from the weekly because
it's just so tight.
Yeah, and it's just so tight. Let me see. I actually like. I think I probably like shorted QBTS on this candle here, but it doesn't work. And then I think okay, so and then I go through the
Sector.
go to the weekly. So weekly is about the 21 EMA, and then it's like a very tight candle inside bar here. And then what if I just like trying to buy here? But actually, I don't remember why am I buying it here. But yeah, so sometimes I'm just going. I still make some random trades, and then but this one very luckily it works. But like most of them actually doesn't work. You can see from my losers. So this trade, although it works really well, but I'm not going to take this one again. I believe I'm not going to take this one if I'm trading it again. Still, I think I'm going to trade it on this breakout. If not, maybe on this pullback or this pullback here. So yeah, this one I don't think my entry was good. So yeah.
Question.
But it definitely okay.
No, go ahead if you want to finish your thought, please.
No, just to say that I just give me like a earlier like a sign, early sign for me to or enter the quantum sector.
Yeah.
So I remember that I got some profits on the QBTS on this breakout day here, then I just give me some more conviction on entering IONQ and RGTI.
Yeah, my question was going to be if there are a bunch of stocks setting up in a theme like here with the quantum names, how would you prioritize? I mean, here you kind of took all of them, but how would you kind of prioritize if you only had room for one or something like that? What would you kind of be looking at to say, all right, this is the one I'm going to go with? What kind of comes into that decision?
Yeah, I think the first one, the most important one would be the relative strength among all. So the best one would be IONQ, right? Or RGTI, I think. On the weekly would be RGTI. On the daily would be IONQ, maybe. But yeah, I think QBTS definitely was the one that I'm not going to consider at first. But actually, QBTS I think I think it outperformed at the second leg up, I believe, or not. Yeah, I think RGTI was the leader and QBTS is the second. IONQ was lacking on the second way up. But on the entry, like on right at the entry, then I think I would look at the relative strength. So I would prefer IONQ or RGTI for the entry, for picking the white one in the right sector. Then I also would like to, apart from the weekly, I would also like to look at the relative strength at the really really recently, maybe 1 to 3 days before, like 1 to 3 days before the really breakout day. So if I'm thinking that I'm going to take the quantum's name, so if I compare these candles to maybe these candles here, I think RGTI may look better, like especially the previous day. This is an inside bar. Yeah, and the volatility is much smaller. That is a tighter candle, and then I think RGTI would be the best choice, I think. But IONQ also looks pretty good on the daily, and also the weekly too. Yeah. And one more point would be the dollar volume. I would prioritize trading the one with the highest dollar volume. So it will be more liquid. So it will be maybe less slippage, and generally I think the one with the higher dollar volume would have a better move. Maybe I'm not sure on this one, but I would love to buy on the one by the most liquid ones.
Yeah, that answers it. Thank you.
So this one is Tesla. Then I bought it at the pullback on the daily 9 EMA. Also the gap, the unfilled gap between the on this Friday here. I think this one would be a fair entry. Definitely not the best one because I think it's like a slight pullback, and generally we pull back to the daily 9. It has the lowest win rate amongst all. Like a slower EMA will have the highest win rate from my study, but sometimes stocks just you have to like take risks. So you sometimes if the stock will pull back to the 21, and then you have a much you have a better entry, more high win rate entry. You have more conviction, or your risk reward will be much better. But sometimes the stock, if it's strong like Tesla here, it doesn't pull back to the 21. So this time I'm just trying to like take a risk and trying to test it whether it works or not. And this time it works. And also I wanted to point out on the big picture, like the weekly and also the huge base here. So it's that building the higher lows, especially over here, and the range starts tightening up. But it keeps building the higher lows. And if you are trying to pull out the anchor VWAP here, so it's but really near the anchor VWAP on this area, and I think this is okay. Then maybe we can like a break and retest and take a try. So and it actually doesn't like pull back into the anchor VWAP, but I think I just bought a 5-minute breakout. So if this one doesn't work and it pulls further back, then I am going to buy the 15-minute breakout maybe. So yeah, it definitely would like is the spot that I am interested in. On the weekly, is this I think it's right here. So after this strong reversal week, this strong bar, and also this undercuts and reclaims off the 9 EMA. So this 2 weekly bar is looking really nice, and the 9 EMA starts trending up. So on this week here, it pulls back into the 9 and the 21 weekly, and so that's why I'm like really focusing on this tiny little range here, and then it just takes off right after it like clear the anchor VWAP and the 150 EMA, and just sell them into strength.
Yeah, nice trade.
So this one is AMPX, would be another pullback buy on the 21 and on the 9 EMA. Also, actually, I believe it's on the anchor VWAP too. So also like a break-in retest, and then it undercuts. But I bought the 5-minute breakouts. Assuming. Oh, so it would be a 1-minute breakout, I believe. So it's a 1-minute breakout, and then as it pulls back into the 21 EMA area, and also like I know that before the market open, you could see where the EMA would be and where the like anchor VWAP would be. So you have it like a has a like a approximate like a support level, around like 740-45-ish or 750-ish could be a support. So when the market when it starts gap up and then it pulls back right after market open, then I will be very interested when it pulls back to the 750 or 745-ish level, and then just bought the 1-minute breakouts. And then this one also worked pretty well, but I'm just I also sell it a little bit maybe too early. It has another way up for 40%, but but this one, because it's pretty extended to the 9 EMA, and then I probably going to set my hard stop right at this candle, even here, because I don't want to set it too close to the 9 EMA. So I really want to leave some room for the undercuts. But I think also that again it's September. I think the market's just maybe extended, being skeptical, and then close the trade early, and then this is another one. And for ACHR, this is a breakout buy, really tight, not really tight, but I really love the undercuts of the 21 and the 9 EMA, but it closes very strong. Then I buy the breakout on the previous bar high. And then I sell some into strength, and then I sell some. This one, I think I didn't sell it really, really nicely. I don't think the final sell is good. And yeah, probably, I don't know, maybe it's kind of a panic sell because it's still above the 9 EMA. And then just maybe it looks ugly on the hourly chart, but yeah, but I think this is a really bad sell. Yeah, in my opinion. And this AMD is a lucky one. I bought this breakout of the previous candle high, also a very tight area when the EMAs are really close to each other. They are really tightened up, and I bought the breakouts of the previous day high. So, and there is a gap up 3 days after. Yep. And I think it's a news. It's a maybe data center.
Was it OpenAI? I don't know. Yeah, it was some news. Yeah.
Yeah, I don't know. Maybe OpenAI. Yeah, OpenAI. Mm-hmm. And then I did a sell into strength for this trade, and then I closes all of them into this reversal bar here. Yeah, this is a little bit got shaken out, but then I think AMD is not close below. Yeah, but I think it is a little bit too extended from the 9 EMA. So, and then I really don't like this. Like, it's a reversal pattern. That's standard. Like, how does it go? The bearish reversal? So
I don't know.
I'm not sure
breakout, pause, breakdown, basically. Yeah.
So I don't. Yeah, I'm not feeling comfortable with that, and then I just getting stopped. I'm just take the position now. So still, it's a really nice trade, 42 hour in a kind of. I didn't expect this gap up, and then so sometimes you have some gap downs, but sometimes you also get some gap ups, the unexpected outliers in trading. This ASTS and
the pullback.
That's a really nice one, But the pullback. But one thing also wanted to highlight is also the weekly one. So you can see the weekly is a large, it's kind of a long base, a large one. I really love trading the first breakouts after the long base. So it really like this. Normally, where's the another great uptrend starts. So it just provides you the best risk reward. Compared to like a shorter base or like a half, it's just a intermediate pullback to the 21 EMA maybe, or the 9. But this one, I think you can see it also respects the anchor VWAP really well. It pulls back to the anchor VWAP. Although these few days it doesn't reverse it, that doesn't rebound strongly, and have a strong close. So I think I didn't catch the rebound here, but instead there's a gap up above the gap here, above the previous gap on this swing high, and then it pulls back, and I traded also the 5-minute breakouts, and actually also at the small base. I think this is a little bit like distorted because of the strong close, but when it pulls back intraday, the end of VWAP is right at this level. It's slightly above yesterday's, like the previous day, so it's around here. So it's actually finding support on the angle VWAP too. So I just bought the 5-minute candle breakouts. Yup, this is another standard one. But I didn't also put it at the bar low here, and this one didn't stop me up. And this is the 5-minute candle breakout. So there are lots of like the opening range highs or opening range lows fades, and then have a 5-minute candle breakout. And I just traded a smaller, lower time frame breakouts, smaller time frame. Sure. and then I sell them all into strengths. Yeah, again, I didn't wait for the close below the 9 or the wait for the pullback to the EMAs. Oh my god, I think it's a little bit overrun. It's already like 3.5 hours.
It's good stuff though. It's good.
No, okay. This is another breakout trade. So inside bar, kinda. I think no, and not an inside bar, just 2 cents away from the prior low. But I still consider it as an inside bar. So inside bar breakouts and then tight stop. So and then this one I just sell all of them into strength. And I think I really like trying to hold them a little bit more longer. So even I am feeling a little bit skeptical already. I think it's always extended, but maybe I can still sell partials. Don't not selling all the whole position at once, or close my position when it's extended. Yeah, but still really nice. I really love the entry, but on the exit wise, I think it could be I could hold it for a bit longer. At least I need to hold it for this reversal day, maybe. Yeah. And for TAM, also another breakout. So it's a really strong reclaim. I think this bar really captures my attention here. So the 9 and the 21 are converging, and this is a strong reversal. It's a gap down, goes lower, and then reclaims and close above the 21 EMA. So a strong sign to me. And then I kind of think it's like in it's hard to say this. I treat it like it's like also kind of an inside day breakout. It's like a 2. If you forget about the wicks, you don't look at the wicks. So it's still like a tight little range here. But I'm not sure on the daily how it looks. And also on the daily that the EMAs are trying to the 9 is crossing up, and the 21 is also stopping up. So I'm just I believe then maybe I think the breakout could be a good entry here for breakout of previous day high. And this is not a very a tight range. Yeah, because it's only 2 days and not really tight, I would say. But I really love how it found support, because generally it would fade to it would face the resistance from the 21 or the 9. It won't close that strong. And sometimes with it would be a continuation move if there's a failed breakdown, and especially when the 9 is still above the 21. So I just treat it as a kind of range breakout, or a continuation breakout, and breakout of this bar high, and then I just take it. And then it sells all into strength. And this time I just kind of sell it pretty at the top, and just right above this swing high, the really red candle, the huge reversal candle high here. So yeah, sometimes it works, sometimes it doesn't for the selling into strength. Bracket. I don't think this one is the one. Okay, let's skip this one. So that's the gold miner ETF inverse ETF. So maybe let's use this to gold miners. Okay, so this one is the gold miners ETF, and then it's actually I'm trying to short the gold. I'm actually trying to short the parabolic short of the gold near this top here. But I think the gold miners are trading moving faster than gold, and then I just decided to take the gold miners short instead of trading the gold short. and also I'm not very good at trading the commodities as this 24 hours, trading in 24 hours. So sometimes the after hours or the pre-market trading times would be a little bit confusing. Should I consider those levels as important levels? So I decided to trade the gold miners ETF, and then this one I think I got kind of lucky because it didn't have it didn't have that strong close or for the late day, so it could be another gap down. But although I'm risking really small, but it's not a really huge position. I believe it's still also at around 30% position for this trade, and if it's gapping down maybe even 5%, it's still an acceptable loss. But I do think this is I get a little bit lucky. I didn't get a gap down and then it reversed, because it could very possibly be a gap down and then reverse intraday, reverse back up. So this one is it has a gap down on the next trading day. So on the gold minus of this ETF, the original ETF would be this day here, and then the second day has a huge gap down with a huge volume. So I knew, and I think this is also the really good one. And I sell some into strength from the second gap down. So it's a really good trade. So it's a 36-hour trade, and it's up 30%. So and then I close my trade also kind of on the strengths. So right here, and as it pulls back to the 50 EMA. So I think maybe you could find supports here, and maybe it would chop around, and then I just decided to take the profits here.
And are you quicker to take profits on shorts than your longs?
Yes, definitely. So mostly I would like to take profit between for the first maybe 2 or 3 days. For some of my longs, I'm not taking profits maybe until where are there any good examples for that? Maybe I would trail it with several weeks, with 2 or 3 weeks before the first trim, before the first sell into strength. But for the shorts, I really want to sell some into strength in the first maybe 2 or 3 days when it has some follow through, and then I would like to close it into strength more. But for short, it's closing into the weakness more. So I'm not because I think for the mathematical perspective, if you're holding a short for longer, you are slowly losing your edge, because stock goes down 50% after if it goes further down 50% after it went down 50%, it would be a 75% gain only if you're shorting. Right. But compared to longs, you'll gain 125%. So I think I will be less willing to hold my shorts for a longer period of time than the longs. And then on November, I cut some. Also, I get some good shorts on the extension or the reversals too. But on this SNDK, I think luckily it works because I have just shorted it above all the EMAs. But so when the market, so this is it shows when the market works. So how to explain? So when the market is really in your favor, is really have some selling pressure, not an ideal entry will also have decent follow through. But for some market for some unfavorable market condition, like a choppy market, like the IONQ trades that I'm shown in the losers, like some really good entry points could could be a loser too. So I think market condition really contributes a lot. But yeah, that's that. And this one I took it for the anchor VWAP pulls back, and also believe the hourly reversal, because the hourly is gapping up above the 50 because it starts trending down on the hourly, and then it just it's on this day here. So yeah, it's gapping up onto the 21 EMA here, and then I just it gets reversed. It reverses after it rallying into the 21 EMA. Then I just shorted at the 5-minute candle breakdown. So I believe I shorted at this candle, or maybe I even short some. I think I shorted this candle. I think so. So it's a little bit anticipated short, I think, because I think it rallies up into the angle VWAP, but it finds resistance. So I didn't wait for the breakdown, because like maybe it stopped a little bit too wide for me, and I really want maybe to try some. This one is like an anticipated entry, so may not be that. Sometimes I still break my rules, but I just keep. One thing would be, even though I love tweaking my rules a bit, or sometimes I'm not really following my rules. But one thing I am setting my stop. I'm always setting my stop before entering the trade, and I'm clearly clarify my stop. And then even if this one not working, then it's still an controllable loss. And the most important part is on the on the daily, it's still yeah. So it's not on the daily, it's on the anchor VWAP too. So so this one I think is a fair one, but I think it's like a fair entry, but on the favorable market condition.
Right.
And actually, you can see the 1 day later, this is also another pullbacks and phase right at the angle VWAP on also the hourly 50 or the 21 too. So yeah. So the last one will be this UUUU. So another pullbacks into the declining 9 EMA, and then I just shorted the reversal of the 5-minute breakdown, and I believe it's also near the angle VWAP for this. No, so I think this is just also a pullback to the 9, but it's also a little bit close to the 50 EMA and the previous highs. So and then I just decided at least it's not extended. So I think this is a fair trade, and so is another fair trade in a favorable market condition. And for this trade, you can see, even though you get a huge red candle and some follow through the downside, it's still only a 5-hour or an 8-hour trade. So for short side, I think for the shorting, that's the risk reward is not that really favorable compared to the long side. So that also tells me maybe I will need to do a little bit less shorts in the next year, because first shorts could be more choppy, and especially on the uptrend market. I think I really shorted it a little bit too aggressively on the uptrending market, and yeah, and also mathematically the short trade doesn't provide you that much of the risk reward play. And yeah, so I wanted to really trade less, especially for the short side. Maybe only aim for the really high quality ones, or the really the market is really bad. It's really below all the moving averages.
If you had to sum up what a high quality short setup would look like, how would you kind of describe it? The ideal picture perfect setup that you'd look to go for?
Yeah, I think that ideal picture perfect would be the first breakdown of the 50 EMA, and then the first pullback into the 50 EMA, and generally when the first pullback first breakdown and then a pullback into the 50 EMA, the 21 or the 9 would be really also near the 50 EMA too. And they start really cutting back and start crossing down to the 50 EMA. So if you has another opens, if it gaps up and then it rally into the 21 EMA, maybe over the 17-ish area, that will be the ideal spot for me. And also maybe near the angle VWAP here. So it will be much more better than this one, I believe. But this one didn't give me the entry. So, but the ideal one, I would say, would be the first pullback after it loses the 50 and overshoots at best. Yes.
Of these winners that you showed, which one had the biggest contribution to your equity, if you remember? Which one had the biggest impact on your performance?
I think they are like most of my winners are probably the one with the highest R. So I think the quantum names are really these three are really contribute a lot. This is the one maybe also that Dust is also a really good short but really high risk reward play.
Right.
Although it's not sizing up, like if you're really size up using a 0.8% risk, I can size up to maybe 50% sizing or something, but I didn't use that high because I kind of aware of the gap down risk too. So, but still a 46 hour trade is really good. And I believe, I think the quantum names are one of the best ones.
Yeah.
And maybe that this ASTS2 is nearly 50 hour trade. Yeah. But I didn't find one like just some like small winners also like S up, so it doesn't really like really stand up. There's a like 100 hour 100 risk reward trade. This is no, it's impossible.
Yeah. I gotcha. One question I did want to have for you is situational awareness wise. And what do you take into account to say, okay, I'm really going to try to press to the long side now. Oh, now I'm going to try to press to the short side. What kind of factors, what kind of signals are you looking for situational awareness? Is it a lot to do with your own feedback, whether, longs are working, shorts are working? How do you kind of come up with, where you think you are with regards to the market trend and whether it's time to go big one way or the other?
Oh, yes. And I believe your own trade feedbacks is the most important one. So it's really whether your new positions are working or not. And this is the major part. And another one is definitely the market, like the general indices. I also look at the Qs and IWM, I think every day. So I keep monitor them. And for example, when Qs like starting to trending up for like several weeks or even months. So you can see on the late July, that's also where I sell my positions into strength because I'm feeling a little bit too skeptical. But sure, it definitely comes with a pullback, but it's actually a sharp one. But what I want to say would be for looking at the Qs that you can get the general market big picture. So with the Qs, it's really kind of extending. It doesn't have a strong, have a deep pullback, and that's not the right place to really stepping the gas and really be really aggressive and take a lot of the new breakouts or the new entries, compared to maybe after this kind of a small base, the pullback to the 9 EMA or the pullback to the 21 EMA, compared to here. So this is how I also would evaluate the market condition. But sometimes I would get like too bearish or like too skeptical because the market is extending. So this is also like I'm like too sensitive a little bit, and a little bit would lead to like the early sell of my positions, and then I mean even like trying shorts, and then there's some breakdowns in some weaker names. Should I like, and the indexes are extended? Are there any like potential like huge pullbacks or correction? So sometimes I get a little bit too sensitive of that, but yeah, I'm trying to like improve this like gradually. And you want to see, if you are trying to like be aggressive, the better place, especially last year, you can see like the Qs are like keep serving the 9, and they find support on the rising EMA, and not only find support, but find support and then it just goes right away. It didn't like spend much time here. And then I think the best time to buy, to be aggressive, would be during the pullbacks of the Qs, or of the general indices, as the individual stocks, like most individual stocks, follow the indices. And that's what I'm also I would look at for building my situational awareness. And the third one would be like managing my own watch list. So I'm trying to like, if there are more and more names in the lagging watch list, or more and more names in the leading watch list, then it means the market is improving or declining. But so one thing that I think I also talked earlier is the small and micro cap watch list that I track, that I have a lot of this fast, but like the smaller cap names, but many of them, like they would like crap down before, like in December. They're not really looking well, such as like this one ALGM, like they're trending above all EMAs, then they're pulling back into the declining EMAs, and I think, this would be the good time for like doing shorts, but it turns out it isn't. So that's the hard part. I think I have to admit that I'm not that really good at like those those market conditions too. So I'm just trying to like really maybe limit my trades, like trade less in those conditions. Especially the Qs are still like hanging up above the EMAs, and the IWMs is really strong and outperforming.
And then there are a few people who are curious about, outside of trading, is there anything you do to prepare for the session? So what does your kind of morning routine look like, before the U.S. market open? Obviously, your Hong Kong time, so things are a little bit different. What are some kind of the key things that you do to kind of be in the right headspace to trade and just feel prepared and ready for the session?
Generally, I will start my pre-market routine maybe 45 minutes to 1 hour before the market open, and I would do the scans, and I'll go over all the stocks in my watch list and the like existing positions, and I think that's it. Like, I'm just going through all of them and see whether are there any good setup, good entry points, or are there any huge like a gap downs or a gap ups, or anything that really worth my attention. Like, Joby, this reversal is really ugly. Then I would start noticing, okay, so lots of those reversals. Maybe the market is like the breadth is declining. They maybe start losing some steam. Maybe because of the last December experience, I don't want to be like too bearish in the earlier stage. But for now, the Qs is gapping down below all the EMAs. I think it's reasonable to start looking or start be prepared for like for any more like further downside or deeper correction, as there are some also like there's some rejection for the individual stocks, the weakness. So and you can see the upstart is getting rejected by the EMAs. that this kind of a science would like sums up, like it would like it would tells you whether the market is like doing good or not. But yeah, I think that's probably it.
Yeah, makes sense. And how long do you spend on market related or trading related practice each day? So outside of trading, how much and what do you kind of do to be improving, be practicing, whether it's looking back on your trades from the day, from recent action? Are there any kind of key exercises that you find really helpful and might be helpful for other traders as well?
Like honestly for now, like for currently, like for the past 1 to 2 years, I know mostly I did my study like within the trading hours, like maybe when maybe 1 to 2 hours after the market open, when I think the market isn't moving, that like the opportunities aren't that much, and then I'm just the randomly scrolling charts, and I'm just finding like, so are there any potential entries? I'm just finding like reinforcing my current, like for example the pullbacks. So if I saw this UPSD base, so I'm thinking like, would there be a potential pullback entries? Are there the anchor VWAP could be finding support in? So and that's it. So you can see, I'm just randomly scrolling through the charts, and then I just like just testing your ideas in your mind, and then just kind of like reinforcing your existing knowledge. But definitely, because as I like for the past 1 to 2 years, there are less and less like a new knowledge that I really wanted to dig really deep, and like to have spend time to study outside of market hours. So I think for the past 1 to 2 years, I mainly do them within the market hours, and I avoid looking at the charts outside the market hours, because I think that doesn't really help a lot to me.
Yeah.
Then I think this would be like we get too overwhelmed by the charts if I'm looking at them like every day and several hours per day. Yes, and sometimes I'm going to lead to overtrading too. So I did study. I did spend more time outside of market hours for studying in the first 1 to 2 years in my trading. But like frankly, like recently, I didn't spend much time outside of market hours, like looking at the charts.
Nope, that makes sense. And going into 2026 and beyond, you just mentioned that there's nothing you really want to study too much, go really in depth. What are you kind of actively working on right now to improve as a trader? Are there any things that you're really trying to focus on improving, this year and like I said, going into the future?
Yeah, one thing that I wanted to like dig a little bit deeper is whether the IWM or the Qs, or whether they are above certain maybe 50 EMA, whether it would like significantly affects the win rate of the shorts or like for the longs. But I think I want to focus on the shorts, because I really shorting it. My shorts in December are really bad, and I just found out that the Qs are mainly above the 50 EMA, and then I'm thinking, so should I like avoid shorting if the Qs are like above the 50 EMA or not? And another one would be like Qs versus IWM before the market correction. And actually, I did a brief study on that after the December pullback. So I December drawdown, and then I noticed the IWM is like the stronger one. This is outperforming the Qs throughout the whole December. And then I'm just thinking, will the IWM lease or the Q lease before a huge correction? So, and then I go back to study the correction of that above, that's more than 15% since the last 20 years, because IWM only starts from the 2000s. So, and I go back to look at every like 15% drawdown from Qs, and I just found out that before 2008, like I believe like 8 out of 10 times, I'm not sure is it the correct figure, but it's like 8 out of 80% of the time, the Qs are the laggard, is the lagging one before a 15% correction. But after 2008, IWM is the lagging one at 100% of the time. So there's zero occasion that Qs will have a 15% drawdown if the IWM is the leading one. So this is a interesting find out. That definitely like the past data doesn't guarantee the future, but this is a really good, interesting data that I found out. So if the IWM is really strong, then the market has a smaller probability of a deeper pullback. That means I shouldn't be that focused on the short side, or at least not take too many shorts. So this is an interesting find out. Then I did in the early January. So I only did a 15% drawdown. I didn't do the 10%, 8%. I'm not sure, but yeah, if you are interested, you can study further for the correction. But yeah, that's how this is like the ideas that I wanted to focus on maybe the coming year.
Excellent. Well, Martin, this has been fantastic. Thank you so much for going through all this in-depth trade reviews. Was there anything else that you really wanted to focus on, or any kind of key messages that you want to share with any viewers watching?
Yes, I think the last part. So the 2026 goals, the limit drawdowns and trade less. I just emphasize it many times. So I know that's the worst for the new traders part. So I already prepared for the slides, and then so you can see these are the names that I missed in 2025. So I think Clement also mentioned this in his interview. He said he has also missed a lot of the leaders. He has also missed a lot of the opportunities in 2025, but still managed to get a great return in 2025. And I really agree with that. So these are I think these names are going up for like more than 100% in less than 3 months. They're all really strong names, and I missed all of that. So it's okay to miss the opportunities. It's okay to get stopped out, and the trade goes into the original direction without you. So it's completely normal, and don't feel like discouraged or sad because you just missed an entry or get stopped out, and then you're not on the boat. And yeah, this is the first really huge takeaway, because sometimes if you miss the leader, like I did in the early December, I missed the sharp recovery, and then I start to getting aggressive on the entries, start to get some positions. But it all failed, and then it eventually leads to higher drawdown and some behavioral slippage, which hurts your mental and physical capital too. And also the December drawdown prevents me, that kind of leads me to skipping the SNDK breakout. It is a wonderful breakout that I probably would take if I'm not suffering from a losing streak or a huge drawdowns. But it's not like a butterfly effect. It will amplifies, and it will affect your decision making, not only from that trade but on the trade later in the future. So it's okay to miss the opportunities and wait for another one to evolve, and you can still have a great year by even though you missed most of the leaders and the opportunities.
Yeah, fantastic.
And the second one is, last year I mentioned it, you have to treat your trading as real business. And then I think a better a visualization would be like trying to imagine how the great traders will trade. So I think you definitely will learn trading from other traders, your aspiring ones, or your mentor or your idols. Just pick one, and then if you don't know, sometimes you just don't know, should I take this setup or not? Should I sell this position or not? You can just ask yourself a question like, what would they do? Like, what would the great traders do? And I think that eliminates maybe more than 90% of the maybe the random trades, the revenge trades, etc. I believe. But yeah, so but like you can also like compare to the great traders, you can also trade like the Wall Street bad guys or the raccoon guy who has a 26% drawdown in December. So, and I think like, so this is your decision. Just really like, do you want to be the great traders or be the inconsistent or the less disciplined traders? So it's really very important. And I hope this really improve like your decision making, or like really helps you to keep disciplined. And that's the second I think the lessons I want to share, and the tips. Also the third ones, these are the really great like sceneries from all over the world, so you can see them like on the pictures. So if you only see them on the pictures, they looks fantastic, looks brilliant, looks gorgeous. But I believe if you're really visiting the really like booking a flight ticket and then really visiting them there in person and seeing the scenes through your eyes, and you will really have a completely different feeling compared to seeing those great sceneries in the pictures. So I think in trading, you will see a lot of traders like sharing the great wisdoms, like the great quotes, the great setup or strategies, and the great lessons that they've learned, like the advice that I'm giving, and or the stories that the great traders is sharing. Like those takeaways or the lessons is very important, and they are really valuable too. But really like life-changing ones, or the really meaningful one, is the lessons or the challenges that you really faced and get through by your own efforts. Like you have to really experience the ups and downs or the setbacks that throughout the whole journey. So I believe this is really important, and I think so. Most of them, including me, most of the new and the great traders would experience a lot of the setbacks and the face a lot of the obstacles throughout the whole trading journey. But you just need to treat every journey as the lesson learned, as a room for improvement, to find out your weakness and then improve them. So it will gradually, like, you need to like get through your own obstacles or your own drawdowns. So please don't be upset, like don't be frustrated, and don't be and you can be frustrated, you can be upset, but more importantly is how you react and how you improve from your drawdowns and from your obstacles, from your setbacks, is the most important part in your trading journey. So I think that's it for my sharing today. Yep.
Excellent. Well, Martin, thanks again so much for walking through all of that. And I think those closing words were really excellent. So yeah, just want to say thank you. I think on behalf of everybody watching, I think this was tremendous. So thank you, Martin, for your time and sharing all your experience and your trades. To everybody watching, I hope you guys enjoyed a tremendous amount. Leave a like down below if you haven't already. Subscribe if you're new to the channel. Yeah, we'll be right back with the next one. Cheers, everybody. Bye.